has never came forward and said ICT could not call these markets accurately. It's the opposite. And many of them still couldn't accept the fact that what I was giving them was the foundation of how they're going to learn how to do this. I can talk to you. I could sit out here and do trades, but that's not teaching you how to do it. You won't take every trade that I traded in front of you anyway, because some of you want to see it fail so that way you say, ha ha, look at this guy. I'm glad I didn't take his trade. I'm glad I faded him. You'll hear that shit. Oh, I took the opposite trade. You will show us. Record that you faded me. Record that. Show us why you were thinking that, Mr. Goldbach. This bullshit Goldbach stuff. I want to see the people live stream with it. Don't make a pre-recorded video and say, well, this is, I went against ICT. That's kind of like lowbrow trolling. Be a highbrow troller, okay? Top tier trolling would be, I'm going to go out here and live stream, and I'm going to say what I think is going to happen with the logic that's not my stuff. Some other stuff. It could be something else. I'd love to watch it. I can take a good ribbing. I have a sense of humor, whether you realize it or not. I really do have a sense of humor. I don't have thin skin. I can take a good ribbing because nothing anybody else is going to say about me is going to change what I already know, what I've already proven. And I've placed it in other people's hands. And you're learning how to do it. You're learning how to do it. And here's the SIBI high. So we traveled all the way down to the lower quadrant with the bodies of that old, should have been thrown away if you listened to everybody else, volume imbalance. Let's go back out just for a moment. Yeah, I'm probably going to need till 11 o'clock today. Honestly, I don't know how long we're going to go today, but I have to get it off my chest today. I knew it. I love it. Let's keep trolling him. He makes longer videos and teaches more. You're falling into my trap. That's not your trap. That's my trap. I'm looking for any excuse to get out here and talk for a long, long time. All right, so if we toggle this back, you can see that's the volume imbalance. And if we anchor a fib to that, you always want to do this on the time frame that the imbalances are forming. So then we have one with our quadrants, and I'm going to take that extension stuff off because, oh, no, I think that was me measuring that wick, isn't it? Yeah, that's okay. So we'll take that off there. We don't need that now. The midpoint or consequent encroachment and the lower quadrant and upper quadrant is now toggled. This candle's low right here, the down close one with the long discount wick. That right there, that low is the high of this SIBI. All this one single candle to that. So in other words, you would see it like this labeled. If I was showing it to you with a naked chart, nothing else annotated, it would be me highlighting this area here. And it would look like this. Okay, and I would just extend it over. So we're seeing the high of that. So since price is above it and we're coming back down, that old array is what kind of array? It's discount. Price is going to draw to it. It can draw to it. It can draw down to it, go through it, and come back up and treat it as what? A premium array. That's how you work through the PD array matrix that I teach in month 4 content on this YouTube channel in paid mentorship level teachings that I've given to you for free. And there's jokers out there selling them, and you're stupid when you pay for them because I've gifted it to the community. It's for free right on this YouTube channel. I got folks that are asking me, which mentorship should I do? And is one mentorship better than the other? You're going to have to go through all of them to get the full panoramic view. But any starting point, anywhere you start, just get started. But if I'm going to be doing this live right now over real-time price action, it's in my opinion that would be the easiest litmus test. Is there any value? Because if I'm out here live and I'm explaining something and it isn't working, or it's doing completely opposite to it, well, right away, you've saved yourself a great deal of time, right? Try doing that with your mentors. Have them go out there and spend hours every single day for free, giving you the invitation to say if there's any real value to it. Because if there's no value, you can quickly save yourself time, energy, and heartache. You want to spend any more time, you'll never have to pay any money for it, and you can go about your business and whatever. And anybody has an opinion that's contrary to me, then you can join their club. So, 1 minute chart. And here we have the quadrants, okay? And disregard, I know it's hard to do it, but disregard this new day opening gap for a moment, kind of like ignore it being there. We have the high of that shaded volume imbalance on the daily chart. This is the upper quadrant to it. Midpoint is this, there's consequent encroachment, it's red. And then you have the lower quadrant level, and then you have the low of it. We traded down, we created a fair value gap right there, and just above a new day opening gap for today. So what does that mean when we're down here? We can go above it. How far? Fill in the fair value gap. I like that because it's laying right on top of the upper quadrant. So are we looking at just a closing of a fair value gap? No. Are we looking for the market to trade right to the new day opening gap and just turn around like that? Because that's what some people have assumed. And they say, oh, new day opening gaps are trash. They go through them all the time. Again, that's the same logic that's going to be held by someone that puts a fucking YouTube video out and says, this is why you should not be trying to use SMC anymore. Because it's being targeted. Listen. If they have something to say about me personally or about my content, all they have to do is step forward and show what works and how this doesn't work. I'm open for it. I'm out here live streaming. I'm not going to stop live streaming because somebody or some other number of people come out and say, this is why ICT is wrong, and they start doing something. I would fucking love that. I want to have a Mount Carmel experience. Come on. Bring me your shit, Bale. I want to see it because I have everything to smoke all of you. I'll call down fire. Come on. I know he'll listen to me, but you're too afraid to come out here and put your stuff out there to the test. You won't do it. You won't do it because you'll have things that don't work. You'll say, well, you know, that's the way because the price is random. It ain't random. I've already proven enough that it ain't random. So if we have this fair value gap in a new day opening gap, we know that it can sweep above it. It need not just trade to it and drop down. No, that's not how it works. Where's the inefficiency? Right there. Do we have something in agreement with it? Just not by a fair value gap alone. What else is in close proximity to it? Inside that volume imbalance, that shaded area, the upper quadrant level is there. Where does it trade to? Boom. And then what does it do? Low, low. Low higher than that low. So what's below that? Sell side. Fair value gap closed? Yes. Bodies nowhere near closing on them, on that level. And where does it go? Down. Sell side. That might be your trade. That might be your silver bullet. Think about it. Roll it back. Let's say you saw this gap. And let's say you bought it because you're trying to figure out how to do this stuff, okay? You're tape reading. You're not buying it per se because you're trying to get a feel for what it is you're supposed to be doing. You're discovering your model, let's say. And say you say, okay, I'm going to try to buy this. And then it goes down and stops you out. Wonderful. That's a wonderful opportunity because then, because of the rules I just gave you, you know that we have a real strong chance that we're going to take this low out. And if it does, then we have even higher probability than the 70% that when we gap higher at the open, that the midpoint gap will be traded to between 9:30 and 10 o'clock. If it takes out that low, we have a 80% chance that it's going to have a 3/4 closure on the opening gap, opening range gap. So that means we're about right in here. So if it takes that low out, we can have that much of a range. So what happens when we start to rally back up and we see that inversion fair value gap? You already see it failed with your usage of you trying to buy it. And now it's tipped its hand to you. So what are you going to do? You're not going to beat yourself up and say, oh, this stuff doesn't work. You're going to say, okay, well, we went below it now. And the rules state that we went down half the gap, we hit that, and we rallied, but then we failed at the fair value gap. The very first fair value gap between 9:30 and 10 o'clock. Take a minute for a second. Take a second, okay? You have my permission to click on this right now at work. Even if your boss is sitting next to you. Wink at Carl as you hit the thumbs up. Because I'm giving you stuff that you have no excuse to be able to find setups in the first hour of trading. You have no excuse now. I've literally pulled back the veil and I've shown you rule-based ideas that are so specific. They're finite. If this, then that. If this, then this. Or if this goes below here, it's going to go back to 3/4, and then you wait to see if it gives you a full closure of the gap. And if it takes out the gap to the downside, which is what it does here, it trades below the low of the gap. Where's it going to trade to next? Well, in this leg here, is there any inefficiency? Fair value gap. Your eye should jump right to it. What else is there? You can't just have that alone. Support it with something else. Upper quadrant of the volume imbalance. So now you have two things. So where's the liquidity at? If you're going to sell short in there, where's the liquidity? Where's the inefficiency first? Well, you have it right there. But that's not enough to get excited about. So if that's all you saw and you didn't factor liquidity below the lows, that wouldn't be a trade you would take on. But you have a low that's slightly higher than that one. It's too smooth. It needs to be made what? Jagged. Sell short. Engage the sell side. Be done. Be done. Because you've had now 1, 2, 3 legs lower seeking liquidity on the downside. So we've pressed 3 times into sell side. The market is entering, well, we got, was it 1043? We're getting close to when the market can have a retracement into opposing liquidity. So we've seen sell off, and no buy side except for this one has been engaged, and this. But we had 3 deliveries into sell side. So it's setting up a potential where we can get a intraday retracement. Even if it wants to keep going lower, it's fine. But you have to measure every single time we engage liquidity. If 3 times we go into sell side, or 3 times we attack 3 successive higher levels of buy side, or 3 successive lowers of sell side, it opens and invites the opportunity for a retracement, for intermediate term retracement. It doesn't mean that you called the low of the day. It doesn't mean it's calling the high of the day. It just means that you need to be aware that you've done this now 3 times intraday. So it can spool the other direction. And many times that sets up a wonderful continuation to go even lower or even go higher. But you have to anticipate that, because I've watched some of my really good streamers, the students are mine. I'm not going to say their name because I don't want to embarrass them. But I've seen them make this mistake. And I don't want to correct them in front of their audience, but hopefully they can hear what I'm saying here and start incorporating it in their analysis. Because the few times that they do it wrong, it's many times because of that element right there, where the market has traded multiple times to take out liquidity 3 times in one direction. Once you get that, you're setting the stage for an intermediate term retracement, or it could be a complete reversal. And the experience is going to determine what that is going to be for you. But most traders, most of my students, don't have that skill set yet, because I haven't taught them until just right now. Okay, so like I said, this is for my son. And since he gave the authorization and wants to have the progress and process of what he's learned and how it's being done, you're all getting to see that. So you're all eavesdropping still. Okay, you're not entitled to any of this information. So I'm telling him, and I'm talking to him saying, look, my students, you think I'm talking to you. You, Montel. You, Brian. You, Carl. You think I'm talking to you, Melissa. Because I'm talking to my son, and I have genuine concern and sincerity behind what I'm saying. But I also know that there are people here that are listening, and you want to learn. So I'm cognizant of that. I know that. But I'm really speaking to my son, and that's why it feels genuine. But if it has this very first fair value gap here, and we trade below it, what's your mindset going to be? Switch to inversion. Wonderful. So first threshold is, where's the midpoint? That's here, consequent encroachment. Do we want to see it if it's a valid inversion fair value gap? Okay, if it's a valid inversion fair value gap, will it, remember I'm just going to be asking you questions today, will it completely overlap? In other words, will it go below it and come all the way back up and touch the high of the old gap? No. And that's exactly what you want. You want to see it fail to close that in as it goes back up. It's leaving a portion of that candle's low and that candle's high. In other words, it looks like this. That's the portion that didn't close in. You may look at these wicks and it causes confusion. You're like, I don't know what he's looking at. I don't get it. I can't see it. I saw an old student from the first group. I'm not going to say your name, but I mentioned I was trying to learn your language the last live stream, and I didn't do very well. But he mentioned in another live streamers that of all my concepts, the one that he didn't do very well with was the fair value gap. And it's because you don't have all of the rules properly applied to using them in price action. I have held back a lot of stuff because a lot of stuff's going to be in the book. And even with me teaching all this, there's so much more to them that make it a fucking science. Like I have PhD technical science behind me. Okay, I am a fucking dean of glean, the freak show of fucking precision. And when you see it in these books, you're gonna be like, what the hell? No wonder this fucking exactly. That's exactly what it's going to feel like. But when you have it in your own hands and you start implementing it and seeing it, it's like you're waiting. You're waiting for that knock at the door. Hey, we need you to come with us. Like what they did with Mr. Armstrong. And he told him the same thing I'm going to tell him. Fuck you, you can't have my technology. You ain't going to get it. You ain't going to get it. This is the closest thing you're going to get to it. Okay? So be satisfied with that. But you don't want to see that complete closure because that's a signature that there's an algorithm saying this should close in, but I'm not going to close it in. And that's a tip off to entities that you're never going to meet are engaging right then and there. Citadel starts firing. Bang, 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 bang. Starts sending short entries into the marketplace. That doesn't drive price down there. They're speedily rushing to get their fills in before the algorithm spools below that low in this manner, as I indicated before it did so. I'm going to ask you a question. Do you believe when you're watching YouTube and the videos that are being suggested to you, do you believe that there is an algorithm that makes that selection of choices for videos for you to consume? Do you think there's an algorithm that does that curates and goes around and collects and saying, this is what I think this person will probably click on because YouTube will make money when you open it up. They make 40%, if you believe it. They make 40% of every YouTuber's ad revenue. So they're going to do what? They're going to look at what you have been doing. What do you watch? Do you watch all of the certain type of video or genre? Or do you watch one or two videos and you probably watch the first 4 minutes and lose interest and turn it off? And the video is 8 minutes long, but you're not completely consuming it. Any videos you watch the entirety of, that algorithm is saying, okay, this genre, this category of video is what we're going to do. We're going to start pushing that. And its algorithm will go through and see how much watched minutes. And you don't fucking think that the highest minds of this planet that are actively looking to fleece everyone that's willing to step into this casino, that they don't have an algorithm that is going to determine when and what time, how long and how far these prices are going to go up and down? You don't think that that's possible? There's no real one algorithm that controls price. It's the buying and selling. That's what moves price. And the person that said that in a live stream, I faded the motherfucker and caught the big blast off move in the S&P as he said there's no way it was going to take out the high of the day. It's comedy. It is comedy when you see what? People talk like they know what they're talking about, or they have a hard opinion about what you're learning. And when you don't know what you're doing yet, it's very, very influential. It's easy to talk yourself out of this stuff, folks. But you're never going to be able to say, I didn't show it to you before it happened. explained it in detail, why it should do this or do that. And there ain't nothing you can do. To my beloved student, Andrew's median lines had nothing to do with what I outlined today. Andrew's pitchforks have nothing to do with what I outlined today. With all due respect and adoration and love for you as my student, I'm saying this with utmost respect. What you're trying to do is reach, and there's nothing there for you. Okay, that's not there. Now, we had the market reach up into this inversion fair value gap. It's the first gap inside of 9:30, 10 o'clock. If you're hunting fair value gaps, Caleb, and that's your pattern, the very first one that forms between 9:30 and 10 o'clock, that's the one you want to see, because you're going to get first response off that first presentation. Bang! Hits it, leaves it open, drops. Next candle, open, trades up, rejection block, highest up close in that price lane. Just enough to bump it. There. That's algorithmic. Drops aggressively. I'm walking you through this market right here. I say, okay, when it goes below this, how do you want to see price? Do you want to see it go down below it lethargically? Like really, really slow, dribble, 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 dribble? Or do you want to see it just go below that and treat that like a turtle soup? The Wish version of turtle soup, where it goes below here and they think it's going to go up. Or do you want to see it do what? Sudden rush down to close the gap, or very minimum rush to get to 3/4 of the gap closure. And then I say, you want to see it rush and do it in 2 or 3 candles, quickly, sudden, just like that. It's going to be in the recording when you can go back and listen to it, okay? I didn't waffle. I didn't talk about the other side. I gave you the very specific elements. How it's going to deliver. I'm going to ask you a question, okay? Come here a little bit closer. Listen. Do you think there's an algorithm controlling price? Because I heard on the street that they just changed it and they're attacking smart money concept traders. Woo! Yeah, baby. Keep giving me comedy. I fucking love it. Oh, this is so fucking good. Smart money concept traps, baby. please make more videos like that. I'll leave comments so you can troll me so you can get more ad revenue. Keep doing it. Oh fuck, that's so good. Okay, all right. I'm sorry. I'm not fucking sorry. Oh shit. Give me a drink. Oh man. Somebody's asses are getting chapped today. Oh man. I should have sat closer to the kitchen. It's too far of a walk. All right, so when you see it trade up in the inversion fair value gap, that's your proper use of the very first fair value gap. It's changing the state of delivery, just like an order block will. Okay. Order block, we don't want to see it go, and when it's a bearish order block, we don't want to see it trade above mean threshold. We want to see it dig up into it and roll over and go lower. Reverse it for bullish order blocks. We do not want to see it go below mean threshold, half of its range. Why? Because the strength is indicated by its inability, its reluctance to get to the furthest extreme. Which is why, again, this is not supply and demand. Okay? There are schools of thought that will say a fair value gap is best filled. And I teach that it's not so. You want to see weakness and failures with these PD arrays. The failure for this candle or any subsequent candle to get to the high end of that fair value gap, to close it in other words, to get all the way back to this candle's low is what I'm saying essentially. A perfect redelivery would be this candle or any other candle trading up into and touching the equivalent low of that candle right there, which would be 19,979 and a quarter. As we have this, we have 19,977.75. So we fell short of that, right? To the tune of the range between that candle's high and that candle's low. That's exactly what you want to see, which is the confidence factor that was given to me when we were down in here. I said, how do you want to see it deliver? And I walked you through the choices. It can go below that low here, and this is where every troll was jerking off saying, here it is, here's where I'm going to go and go in social media in another person's chat and say, I hear his ICT calling both sides of the marketplace, but now it's even worse. He's given three scenarios, okay? Go back and listen to what I was doing. Do you want to see it go below that low, a little bit short and go higher and reverse? Do you want to see it go below it and just dribble down and go slow? Or do you want to see it go below it and then large candles and speed, just like that? You want to see large candles and do it quickly with speed. That's what price did. Okay? That would be Caleb's entry. That's his model. Not because of anything other than knowing that the gap was here. We failed to get to the consequent correction of the wick that would have been obvious for it to reach up to. We created a swing low. It traded back to mid gap of the opening range gap, and then rallied just outside of the opening range gap. Then rejection block here from the daily chart. Is that support and resistance? I want to ask you another question. Are you seeing support and resistance being applied here? Has Elliott ever got off the beach yet? Nope. He's beached. He ain't got his surfboard, his wind sail, his airfoil. Okay, he's not. Unfortunately, he ain't out in the water. He's still watching. Rejection at the rejection block. Trades lower, below the gap. Caleb's school of thought will be, I want to see this gap be overtaken to the downside, and then offer me an opportunity to get short. At what price? He will use this candle's high, 19,973 and 3/4, minus one tick. That would be what? 19,973 and a half. That means all it has to do is book that high. Theoretically, that one tick difference should fill him. But I'm affording him the luxury of seeing anything inside this gap. I gotta wait for Miss Scout. She's in here trying to find her position in her kennel. If you have a dog, you ever see them walk around in a circle like 20 times before they lay down? Do you know why they do that? They have scent glands in between their paws. And what they want to do is they want to keep walking over to place where they're going to lay at until they smell their own scent. And when they smell it, then they'll lay down. But she's having a real good time. We just brought her a brand new blanket. See what you get here? Extra, no cost. She's distracting me, so I have to give her a chance because it's going to, there we go. So the rejection block, we trade above that. We did get the midpoint of the gap. So if we go above the opening range gap here and then come back in, the net low is going to be suspect. So if it's going to take that low out, then we go to 3/4 gap closure and then full gap closure. We also had new day opening gap high and low inside of the opening range gap, that blue shaded area. This is a fucking masterclass, isn't it? Like, seriously, tell me where you see this stuff in a book to this degree. Explain before it happens. Like, think about it. Like, isn't it fun? Hit the thumbs up if you think this is fun and you're engaged and you're learning and you're seeing the details of it, why it's doing certain things. It's not enough to see a fair value gap and think, oh, I know how to do that. You have to have logic. You have to be able to frame narrative, seeing what price is likely to do because of a logic that's placed behind it. And guess what that logic is leaning on? It stems from the understanding of an algorithm that many will say does not exist. So, let me ask you a question, because I said today we're going to be proposing some questions to you. If there is no algorithm, Isn't it basically saying a greater feat of mind reading is being accomplished by me, that I can read the minds of every buyer and seller? You never really thought about it like that, have you? Either I am the greatest mentalist in the history of the world, okay, and I can read the minds like Professor Xavier, okay? I'm sitting in here and I'm looking around the whole world and I'm scanning everybody's fucking brain and I can see what everybody's doing, buying and selling, and I'm reading their minds. I can't do that, folks. That doesn't work. That's not real. ESP ain't a real thing. But there is an algorithm, and there's somebody out there that knows what makes it movements higher and lower, when it ticks, when it talks, when it stops, and when it rocks. I know his name. I know where he lives. I know his social security number. How about that? I'm in the know. I know the guy. I know that guy. I know him. Wish I could introduce you to him. I wish you could meet him face to face. I really wish you could. But this is going to have to be enough. So he would take that trade based on that logic. His stop would have to be above consequent encroachment of this wick. Now, why that? Why not the high of that? Because we already had this low. We drop down, immediate rebalance, then it drops. So for someone that is a little bit more scared, or you don't trust that type of stop loss placement, you could use the high. That's fine. But he's going to have this as another frame of reference. He can use the midpoint of that wick and just a tick above that, because it's not going to go back up there. If it were to stop him out right there, then I would use this level here to instruct him to go long. Then it would be reclaimed bullish fair value gap. To get to that midpoint here on that wick changes the whole classification of this being an inversion fair value gap. So he has a rule-based idea that he can learn, not that he needs to do it right away, because he will not be allowed to take two trades. He takes one trade, that's it. One and done. Fail or profit. And whatever the outcome is, that's what it is. Give me 1 second here. Gotta wet my whistle. I'm probably gonna need till like 11:15. Okay. I knew he'd start making long, but it won't be long, I promise. Long would be like 6 hours. But the placement of the entry, I explained to you, one tick below this candle's high, because I want to make sure he gets filled. And he's affording himself the drawdown up to half of this wick plus 1 tick. That's his stop out, okay? If we wouldn't have had this immediate rebalance, then his stop would have to be above there, okay? Simple, very simple guidance, okay? Very rule-based, very specific. It's not wishy-washy. It's continuous logic that stems from what I've already talked about, where the stop placement is for a fair value gap anyway, but I'm augmenting it to fit him and how he can keep his risks smaller. Not that it affords him more than one contract, because he can only trade with one contract, okay? He will be starting with micros, because I want to see him implementing it there. And as long as he's consistently doing that, then after a month of doing it there, then he's going to be permitted to trade it with one standard lot or contract of NASDAQ. He will not be trading ES. I want him to trade the NASDAQ. Not because there's more advantages over it. Everything I'm teaching here works in ES. Everything I'm teaching here works in Forex too, okay? I just don't want to be messing around with Forex right now. So many things going on with the dollar. There's a de-dollarization, whether you like it or not. That's what's happening. I told you in the Twitter Spaces last year, all the nations that's doing what they're doing was going to do what they're doing. I told you what the headlines of the newspaper were going to be last summer. It's happening in front of you. And all of that's working towards removing the global reserve status of the dollar. Like, it's on its last legs. So I don't want to be in a currency market in that climate. Okay, so you can clearly see that you can make all the money you ever want trading one indice. Okay, Gold is going to keep going up because, especially if we have a war event thing pop off over there in the Middle East, we'll probably see $3,200 on gold, maybe $3,500 by Valentine's Day. But if we get short on that idea, his partials would be here if he has multiple, but he can't, so he has to annotate that. His next one would be 3/4 gap closure. And when I say 3/4 gap, you probably don't, especially for the folks that are not English speaking, it would be this price here. So selling short here, below that low, what would be the next threshold to reach for? It would be the 3/4 of the range that makes that opening range gap. So that could be your partial, okay? And the next would be the new day opening gap high, or somewhere in the vicinity between its low and high. And then if it has been enough time for him to build his equity up and he has 1.5 times full margin, 1.5 times the full margin for the NASDAQ, each time he can meet that threshold, he can trade one more contract. That means he cannot over leverage. It's impossible for him to over leverage. He can only take one trade a day. If he loses, he's done. If he makes money, he's done. Dad is calling the shots. So you probably never looked at your trading like that, where you were holding yourself very rigid, saying, I can't let myself do this. You want to be able to be flexible with rules and say, well, ICT said this, but I'm going to do it. ICT says don't trade on Mondays, but this guy says, look at what I made on Monday. Ha ha ha. Show me every Monday. Don't just say the one you did today. Go into your account like I did, TD Ameritrade account, log into it. Show every single day, every single print, every single broker, every broker statement, every one of them. Do it for 3 months. I bet you won't do it. I bet you won't do it. Anyway, for continuation, if he's afforded himself the amount of equity that he would carry more than one contract, he can then wait to see if we can get below the new day opening gap, which is what we see here, and then wait for what? A retracement. We have a fair value gap, and this fib is not that level. Upper quadrant agreeing with this fair value gap. So we're sweeping above. See, we're sweeping above the new day opening gap. Isn't that what I taught when I started teaching in these lectures for the 2024 mentorship? You want to give the algorithm a chance to move around these levels because there's going to be stops and liquidity, or it will entice traders to chase it. So this type of movement here causes traders to do what? They want to chase it. And if they think they understand fair value gaps, what are they going to do on this little thing right here? They're going to try to buy that right there. And they're going to get their asses handed to them right there. And they're going to walk away thinking what? These fair value gaps don't work, and they're making traps for smart money traders. No, that's an opinion of someone that can't consistently make it work in their hands because they don't have all the information. Which, if I've said this, I've only introduced the concepts. I've only introduced them. There's so much depth to these things, when to use them, when not to use them, and I'm proving that I'm the only real McCoy with them, which proves it's not somebody else's logic, is it? Because if it's something that's been rebranded and renamed, we'll go to that source and just go right to what they wrote about in their books and just parrot that stuff out. And it should match what I'm doing, right? But it won't. And it won't be able to match up to it either. It won't live up to the precision elements. You won't see it. So we have that old volume imbalance. Key levels: upper quadrant, consequent encroachment, which is this red line here. Lower quadrant, and then the low of it. New day opening gap. We want to see it do what? Sweep above it. And then provide a means of going short. How can we key off of that? Fair value gap, 3/4, sweeps above. We're in a premium. Where's it go? Sell side, drops down. What is this? Sell side imbalance, buy side inefficiency. So would you look at this frame of reference right here, annotating that low to that high and extend that out in time? Would you do that? You would if you didn't know how to do fair value gaps properly. What is this? What is that? inversion fair value gap. You're going to see buy side imbalance, sell side inefficiency here. When you're in a market that's going lower, you want to see buy side imbalance, sell side inefficiencies be used as future inversion fair value gaps. When I was on Twitter Spaces and I was saying, you want to note this fair value gap and label it inversion fair value gap. And then at a later time, it trades up into it and it repels away from it. And everybody's like, how the fuck did he call that inversion fair value gap before it was a inversion? Because I know what I'm doing. You're listening to the author, folks. I mean, I don't know how else to make it plainer for you. So if you know this logic, you can then, once you wait for them to form, Caleb, you extend them forward. When they agree with another reference point, something else. It cannot be one singular PD array. Minimum 2. 3, you got a lead pipe cinch trade then. What's this red line right here? It's consequent encroachment of the old daily volume imbalance. What's it touching right there? That level. That's also part of this inversion fair value gap. See that? I laughed so hard I gave myself a sore throat. Good. Maybe your ass will shut up. Nope. I'm going to make a long one tomorrow. So the market sells off. Short-term sell side, minor sell side liquidity pool basically, and trades down. We have this low, all part of August 20th new day opening gap. And we have this low. So we have 1, 2, 3 levels that retail is going to see that as what? What does retail see in that? They don't see the new day opening gap unless they're familiar with my concepts, but they're seeing a low, and a low. So technically they're going to view that as a support level. Okay. I don't see that as a support level. I see that as a means of, okay, like a barrier to breach, okay, to break through it. Like the door said, break on through to the other side. So we're getting a little close to lunchtime macro. So I would like to see it do, if it's going to do it quickly. And then we can attack maybe the new day opening gap here in this high. If it takes that low out, I would like to see that run for the lunch macro. Lunch macro, again, for those that are wondering what that is, the market tends to retrace against the underlying direction that has transpired that morning session. Obviously, I think everybody can agree that it's been dropping since this morning. So this morning we've had trailed stop losses. And then what you want to do is, if we take these lows out, we'll just make it easy. Say these lows are taken out to the downside. And then the lunch macro starts between 11:30 and ends at 1:30. It does not mean there has to be a retracement. You want to look for the opportunity for it to happen. What you do is, you at that time at 11:30, if you see something that is potentially setting up the retracement for the lunch macro, a macro is a short list of directives that is a code, is a script. The algorithm will start running to opposing liquidity. Okay. About to lose my voice. Lord help me. Someone out there praying, please let him lose his voice. Please, he talks too much. This high, if we go below us, this would be the first high you get to that has to be post 10 o'clock. So here's 10 o'clock. So you would use that as a beginning point. Go to the right, and every high, here, that one, but then we made this high, and then we made this high. So I would use this high as the lunch macro. That's where the market would draw for a retracement during the 11:30 to 1:30 retracement. It does not mean that at 11:30, it's just going to start going up and go right to that level. There's other things that you have to factor in, which is why it annoys me when people go out and they try to teach something, because you don't know what you're looking for. These are all casual introductions. And then because you're going to be looking at price, studying them, looking at how it behaved in the past, you'll develop pattern recognition. You'll see things that repeat, and you'll make a log of that. And then you'll start seeing them in real time at the time when they generally form. And you'll know, oh, It's probably going to do this because it generally does this very thing. And if you add to it the long-winded diatribe that I give in these lectures, that's the meat. That's the real sauce. That's the stuff that helps you trust what you're messing around with and studying. You're going to hear me in your own head say all the things you've heard me say today in other lectures if you've taken notes and you've wrote it down. And it's a lot. I understand it's a lot. But what do you think profitable long-term consistently trading is? It's not a one-hit wonder. Go to a workshop and listen to 20-year-olds call themselves chairmen and all right, now we're all going to own the world. That's not how it works. It's a lot of work in the chart. It's a lot of boring logging, a lot of um, just capturing information. So that way you have a baseline to evaluate what you're observing in price. How do you behave? What do you think? What do you feel when you're watching price action? And you're going to watch how that gradually moves towards all the things you were worried about initially. I need to learn this. If I learn this, then I figure it out. Or if I don't learn this, I'm never going to be able to be successful. And you're going to see that you're going to have incremental progress. Small little baby steps that will eventually show enough improvement in a very short time. 1 month, you'll know right away that this stuff is working for you. Now, it doesn't mean you go in and you take profitable trades. This means that you're seeing progress right when they're happening, where they're going to go to next. And you got to watch that for months. So that way you get real bored with it. And where you're able to see where the setups form. Oh yeah, I was gonna take a buy there or a short here, and I watched it, and it didn't go down to a level that would have stopped me based on the rules that I was teaching. So I've done that for 3 months. So now I can start doing walk forward with a demo, and then you do 3 months of that, only that, one trade a day, whether it's profitable or not. If it's profitable, you're done. If you lose, you're done. You let it sit on it, sleep on it. Because you got to get real comfortable taking a loss. Because every trader takes losses. Every single trader takes loss. And every single trade you open up, it's a losing trade until you trade your way out of it. Think about it. Every single trade that any trader opens up, it's immediately a losing trade that has to be traded out profitably. Or you'll lose. You'll go into it with a realized loss. So if you accept the fact going into this that you are eventually going to lose trades, and there's nothing wrong with that. It doesn't mean you can't be profitable. It doesn't mean you're not a good trader. It doesn't mean that you have to have a high yielding strike rate. You don't have to have 90% strike rate. You can be profitable with 50%. You can be profitable with 35% accurate. There's the rundown we were talking about, running those relative equal lows. It's just like every time I say something, I can't keep a secret. If I say something, it just spreads, and all of a sudden the CME just says, fuck it, ICT wants it to go down there. They said, might as well just do it now. There it is, it's done. So what I'm interested in, does it accelerate after taking the next candle, bump the low, or maybe consequent correction on the new day opening gap, and then run that low right there? If I was making the market for NQ, I would do that. And I wouldn't take it higher before it did that. But that's just me. I'm not saying that's what's going to happen. But in my head, that was what I just thought, and I just thought out loud so that we can kind of get a feel for it. But look at the reaction off of this gap here. And it's the low of what? The old, stale. I better stop. I have to get serious, okay? I got to get more professional. Look at that. Look, now, if it's going to go that far, look at the next new day opening gap down here at August 21st. What's the chances it can at least tap into that? Just for shits and giggles. Can it do it? Can it do it? I don't know. Do you need it to do that? If you were short and you were looking for a partial, do you need my invitation to take partials? I know some of you are already short. If you're not taking profits, some right here, you're full. Take something off right now. But the fair value gap here is also a rejection block. See that up close candle? And what? It's the low of that stale, old daily volume imbalance. That you never would have had that level on there prior to that daily volume imbalance being outlined last Tuesday on August 13th. August 13th. How many times has it used that area? Multiple times. Multiple times it's used it. Now, I'm going to ask you a question, and then we're going to do a quick review of yesterday's trades, okay? Because you're probably wondering, what's those little blue boxes here, these little things? That's got to be an indicator. No indicators required. But do you believe that they're targeting my concepts? Do you believe the market makers are targeting smart money concepts, my life's work? That's my stuff. If anybody says smart money concepts or SMC, what you're saying is it's my stuff. It's my lectures. It's my teachings. It's my concepts. I codified these things. I did. Me, Michael Joe Huddleston, I did that. That's not me bragging. I'm reminding all you asshats that have worked very hard to hide my name behind your bullshit mentorships, which were parroting me. Everything I taught in the 2016, the 2017 private mentorship, and every lecture that I did for free, they're not even on my YouTube channel anymore because they're not that good. I don't like the presentations of them because I wasn't that good at making videos then. It's cringy. I don't like it. But my production level of those videos were not on the same level that I did later on. So, but there's a lot of people out there that have those videos. They have them on like their Google Drives and whatnot. And unfortunately, some people still try to sell them because they think that they're vintage, and you're not going to learn anything better in them that I didn't go crazy with in detail with everything that's on my YouTube channel now. So you honestly should never, ever, ever pay for anything ICT. You shouldn't, because I've literally given it to all of you for free. And it's expensive because it's going to take you a lot of time to learn it. And I wasn't making it longer for the sake of making it longer. I wish I could have just did it in a 5-minute video and be done. Like I would rather be out doing something else. I really would. I have a lot of hobbies that I want to do, and my kids, they're all adults now. I'd like to be able to go, just take off and go. I'd like to see it stab down there and hit that new day opening gap on August 21st. I'd like to see that go boom real quick and be done. I'm waiting to see if it'll do it, because then I can go into the discussion about yesterday's trades. But so this is a reminder. I know it sounds, a little laboring hearing me say it again, but I just know if I was able to sit in a lecture like this when I was 20 years old, first getting involved in this stuff, if I would have watched someone outline this stuff and explain the logic behind it, because I was a computer programmer from 6th grade. I was making my own video games, simple stuff like Hangman and stuff. I coded that stuff with basic language. Basic, that was the language we were learning in mathematics then. And I stayed after school every single day with the math teacher's approval to use the computer. And I went to the library and I bought books from Walden Books in the mall, in Golden Ring Mall, that I would take a cab with my own money I earned from moving picnic tables with my grandfather. I poured myself into it. And I had a technical mindset, highly critical, very analytical. And if someone, when I was 20 years old, would have had this level of aptitude, understanding, foresight, and knowledge, proving conceptually that this is what is behaving behind the scenes, this is what you're looking for, this is the things that price will generally do. I don't need it to be all the time. You don't need it to be all the time. It's just like when you get a flat tire and you miss a day's work. Are you going to quit your job? No. Does it make your job unprofitable to maintain because you couldn't get to work on time because you got sick? No. That's a loss. Your stop got hit. You got margin call with a trade that you put too much leverage on getting to work speeding that day, and you hit a curb and you blew the tie rod. Tie rod's tore up. You got to buy a tire. You missed days work. Guess what? You got a margin call. So what are you going to do? You're going to put more money in the account because you want to trade. Well, same thing. You're going to go back to work. You're going to go to work. That's how you make your bread. That's how you make your money. That's how you take care of your family and yourself. Well, trading needs to be the same way. And when you have the perspective that I'm teaching, it literally gives you confidence that is on another level. Sometimes, and it's generally with the young men, it's overconfidence. Because they hear me talk, they hear me hype up, the students, because you need to be cheerleaded in the beginning. You do, because it's very, very technical stuff. It's dry. And I try to break it up with some of the things and feelings I had going. Like when I'm talking to you live, as I'm saying certain things, I have memories because I journaled for years. And the things that I used to make a big deal about and I thought were paramount and tantamount to me, oh, I have to do this or it won't work ever. And I discovered that was the silliest, the stupidest things I was putting too much emphasis on. And the greater lessons were the things I didn't even know I needed to learn and were a byproduct of going through the motions of doing it the right way. And I didn't know what the right way was until 6 years later. 6 years later, I had discovered that I was making it harder for myself, demanding more than what I had already done, which is crazy. When you have this perspective, okay, you don't have any fear of it ever stopping in the future. You don't have any fear of missing the next trade. You don't have any fear of, I better be in front of the charts tomorrow because I might miss a move. It removes all of that. Because if you know in your heart of hearts that these markets are controlled and they're rigged, and there's nothing to be ashamed of by saying that. Like there's a stigma around there. Oh, you're one of those ICT cult members. There is no algorithm. Everybody has the same invitation. Mr. Volume Profile, Mr. VSA, which is bullshit too, by the way. The guy left a comment. I used to troll a guy. I can't even think of his name now. He's on YouTube. Got it. He's not on YouTube. Oh, maybe he is on YouTube. I think he did. Yeah, he did have YouTube videos up at the time. When I was back on Baby Pips, there was a guy on there that he was trying to be like the big cock of the walk on Baby Pips. I didn't realize it at the time. I just knew that shit he was saying was bullshit. He did some kind of thread or two on Baby Pips. It was around VSA and volume stuff. It's all dumb. But I started teaching what I'm teaching, and I was teaching optimal trade entry. And he got ass hurt and was like, "Oh, I'm making all these videos, but nobody wanted to watch my stuff." Real bitch move. But shouldn't have said that. I'm sorry, man. I know you don't like that word. But for the life of me, I can't remember his name. Pete Faders or Pete Faders or Fader. I don't know, but I was fading him. And the point is it caused traction over there, and everybody started dividing, and it was Team ICT or Team VSA, and then if it wasn't that, it was the people that had some technical threads or whatever, which weren't even that great, but they thought that was the best thing in the world. But if you compare and contrast what you're learning here, what you're learning on this YouTube channel, and all you have to do is show up, take notes, and study and see, and you will prove to yourself that there's something going on behind the scenes. And I cannot take you to the actual elements that's occurring. And there's other things that I see things that I'm going to cover in the review of yesterday's trades. I can't tell you every small facet to what I was seeing, but I'm going to try to describe to you when I'm looking at price action and when there's manual intervention. I can't see it all the time. You won't be able to see it all the time. But because I've been doing it long enough, and I also know what's going on behind the scenes, how these gears turn, what every cog does, it's flirting with it. You see that? Come on. Sixpence None the Richer song. Kiss Me's coming to mind. Every time it gets close to a level I want to see it touch, or if it's a limit order or whatnot, that song comes on. Oh, look at that. Look at that. Look at that. Thank you, Phil. Thank you, buddy. I'll send you a Christmas card. Tell Jonah I said hi. All right, now let's go over to yesterday's price run. We're looking at regular trading hours still. Look at that. It's handicapping myself. Okie dokie. Let's look at some price delivery first, going into today's New York session. I'm going to ask a question, okay? First one of the day. Who's doing it like this, Patrick? Patrick Whelan, the #1 day trader on YouTube. Who's doing it like this, baby? Who the fuck is doing it like this? Talk to me. I'll put something on your ass. Ajax won't rub off. Come on. So we have this midnight, Wednesday, okay? And we cross over to Thursday. Prices trading where? What is it doing here? What is that? Relative equal lows. Okay, wonderful, wonderful. But why is it doing it there? Well, what does it say over here? If you get the membership level on TradingView, ICT's screen sharing indicator, where everything is on my chart, goes on yours, it's $350 a month. It's only going to be that price for right now. But in 90 days, it's going to go up. Some of you are like, what the fuck? Oh, man. And others are like, where do I send the money? No, I'm being facetious. I'm teasing. I don't want your fucking money. But the level is the old daily sell side imbalance, buy side inefficiency high. When I took you on the daily chart, remember it was that red box that said if I was going to highlight, it would be looking like this. That's what it's doing. So when price is above it, okay, when it's above it, how is it going to treat that level? As a discount level. Sweep. What's the body's telling you? It ain't even touching it. What's the body's telling you? It ain't even touching it, but it's a higher low. The market rallies back up. What is it doing in this area? Where is it at? It's inside that old daily volume imbalance. So what I'm giving you a structure in the marketplace, like an X-ray view, a CAT scan, okay? You're able to see behind price action and what the market's really respecting. It's not the buying and selling pressure. The algorithm is sweeping into these levels, crossing over levels, coming back down. And then once you know what the narrative is, where the price can go. Well, what is that? What is that? Over here, what is this? Relative equal highs. What's resting above those relative equal highs? Buy side or buy stops. It's traded down to a discount level or PD array in the form of the daily sell side imbalance, buy side efficiency high. Okay, that is a PD array. That's one of the 81 that I have. Each one of those have a characteristic that can be inverted. So when you are expecting higher prices, which we've been calling, we have not been trying to pick the top. The market trades down outside of the volume imbalance. So where could it trade to? The next PD array on the daily chart was that high, that SIBI. It trades to it here, then moves back inside of the volume imbalance. Inefficiency on the upside after poking its toe outside of the yellow area, which is the volume imbalance. This fair value gap forming when? Look at the time. What time is that? Right there. What time is that? It's 1 minute past the opening range at midnight. Oh, you did talk about that, ICT. You did. You did say if I want to trade in London, if I want to trade European zone trade time-wise, okay, you want to trade the Eurozone's opening session? You want to trade London kill zone? You want to trade Asia's close? That reference point there from midnight Eastern time to 12:30. That's your opening range. Okay. First presentation. What is that? First presentation is when you have time of day, because everything starts from time algorithmically. And first presentation. That means the first inefficiency. You want to take that and carry it through. Cast it forward throughout the entirety of the day. Okay. It uses it here and touches it right there. It drops right into that. Okay. And I'm going to show you a secret indicator. And it's really important that you have to agree to me. Agree with me. Spit on your hand. Handshake. Don't spit on your hand. I would never do that. I don't even know why I said that. That's gross. I'm thinking of the movie Stand By Me, which was amazing. Amazing movie. The book was actually better. It was part of a Stephen King novella called The Body. But I think they did a really good job producing that movie. It's one of my children's favorites too. But they shake hands like that in the movie. But it's kind of like a pinky promise. You remember doing that in school? But here we have 1:50 a.m. right there. All the way over to 2:10 a.m. Everything I'm showing you is the same for British pound versus USD. Same thing for euro versus USD. Same thing for dollar yen. Same thing for dollar CAD. Same thing for Aussie dollar. Same thing for New Zealand dollar versus the US dollar. So Forex, it works the same way. Okay. Please stop demanding that I show examples. I said I would, but when it's salient and it's not something that's only specific to Forex, I can say these things and they're germane. It's the same thing. It's the same thing in Forex, okay? But this is a macro. It's the first one you're going to get to as you enter into London Open Kill Zone, 2 o'clock to 4 o'clock. That's your sweet spot, okay? Then we see it touch that fair value gap, which is first presentation right there, inside of the range of the first 30 minutes, 12 o'clock to 12:30 a.m. Eastern Time. Does it react off of it? Yep. Creates another fair value gap, which is also part of what? What do you see here? Here, here, here. Bullish breaker. So even if you don't see this fair value gap, it's fine because you'll get the breaker there. Drops once more. What is this little indicator telling me right here? $350 to $410. I'm going to ask you a question. Does the market respect that fair value gap here? And does it respect it here? Does it send price higher? Yep. What time, Dave, are these setups for me? The macro times that I said. So you're seeing lower quadrant of the old stale daily volume imbalance. Lower quadrant, consequent encroachment, fair value gap, time. What time is the setup going to form? If there's an algorithm, that means it's going to do something based on a repeating time. It's a time delivered mechanism that price will begin to spool. I don't give a flying fuck who says what otherwise. I don't give a fuck what their title is at Goldman fucking yank my nuts. I don't give a fuck if it's Citi. I don't give a shit if it's fucking any other investment bank. I don't give a fuck who they are. They can be on CNBC with their fucking dick hanging out. I don't care. They can tell you anything they want. The market is not controlled by buying and selling pressure. That is the biggest fucking load of horse shit there's ever been. There are no fucking smart money traps, okay? There is no fucking algorithm change. Does this look like to you? Does this fucking look like this has been changed, manipulated, somehow fucking augmented, and no longer useful? It's obsolete now. It's fucking obsolete. Look at this shit. You tell me. Has anything lost its luster in my life's work here? Hell to the no. No, baby. No, no, no. No. How pretty, how pristine is this? It's so perfect. And because there's an algorithm that controls all of this stuff, that's what you're expecting. You're expecting these things, these repeating signatures that tell you unequivocally there's absolutely something controlling it. And oh, that's a beautiful deer. I'm in the morning room, sorry, but this deer is gorgeous. It's beautiful. Some of you are like, man, I wish I could shoot it. I can't look at them like that. I guess if I didn't have food in the house, I probably would do it, but I just can't bring myself to shoot them. But these elements of just perfect presentations of how the market will repeat. Okay, stop for a second, okay? How many schools of thought or discipline or styles of trading do you personally know? I'm not saying that you know how to trade them, but what are you familiar with? Like supply and demand. You have Elliott Wave, you have Dow Theory, you have Wyckoff, you have oh shit, harmonic patterns, all kinds of stuff. Okay, and then you have my stuff too. How is the market at the times that I teach you when the moves are going to form? All the kill zones. Okay, there has been no change in the algorithm. There has been no weaponization against the things I've taught. And you don't even know 1/10 of the shit I know. And you're thinking that now, oh, it's changed. It just means that you don't know what you're doing yet. And especially if you sell services or if you're selling engagement, it's a perfect cop out for you to say, well, I can't do it. So then it's easy for me to say, don't listen to ICT stuff because everybody looks for an excuse to take the off ramp because it takes work here. You're going to work your ass off. But I'm telling you, there ain't a motherfucker walking this fucking planet that's ever going to be more precise. Ever. They're never going to be able to time it. They're never going to be able to fucking be as precise. They're never going to tell you what it's going to fucking do and consistently be able to tell you where it's going, why it's going to go there, and how it's going to behave with the delivery and price. It will never fucking happen. It's an open invitation. Daddy's home. I'm out here. Let's go. Not one of these fucking talkers, not one of these motherfucking talkers have made their way up on the fucking leaderboard. You're asking where I'm at. I told you. They would not come. Dave, with all due respect, buddy, just bring it. Stop sending messages like a pigeon between fucking ProCharge and Mopar, okay? He's in both of our communities. Stop doing all that shit. Get on the fucking leaderboard, okay? And there it is. But doing all this stuff, stop. That's dumb. I expected more from you. But not one, just like I told you, not one of these motherfuckers ever came. Not one time. And I'm rubbing your fucking noses in it again out here. I'm begging for it. Come. Come. I have not forgotten how to fucking trade. I have not fucking somehow got amnesia. Does it look like I don't know what the fuck I'm doing? Some of you are thinking, fuck, I'm glad I didn't do it. You're fucking right. Where to trade to? See that? But it's probably random. It's probably random. It's probably, I don't know, guesswork. Let's go into yesterday. And with the right volume imbalance on the chart, which is this over here. I ain't got nothing but love for you, Dave. It's all fun. I promise you. Painless. Fall on my sword. So we have the volume imbalance here, and I have the quadrant levels there. I was watching price on the 1 minute chart, and if you look at yesterday's presentation, it was the only video I put up. I didn't do a live stream yesterday. I didn't feel well, and I had a lot of things going on with my niece who's now gone. So it shouldn't be all that much distraction going into September and October's live streams. But I will not be live streaming November and December because it's holiday. So I told Caleb I will live stream price action. I'll give you everything that I'm willing to pour into it. But when we get to November, I'll do pre-recorded videos and lectures that amplify what has been shown in the live streams. But I will not be live streaming in November and December. Okay, so that way, if you want to know how long we're going to be doing it, that tells you. But I was watching price yesterday, and we did trade up into the volume imbalance, lower half of it, but didn't quite get into the second half. And we had this big dump off here, and it rallied once more. And as we dropped down in, I was watching that new day opening gap on the 20th. I'm thinking to myself, hey, if they can send us on a closing basis below these lows on here, then I'm going to use any return back up into that new day opening gap, hit that, use it as a sell-off, and go lower. And I was going to aim for this, not this, what am I doing? This low here, because it's part of a breaker there. So this high, this low, two forms of what? Discount array. I want to see, does it want to go and close below here? And it didn't do it. And as I was watching it, I was looking at this fair value gap that I didn't go watch the recording yesterday. You'll see me do two things there. Because I'm using a 1 minute chart and because I'm trying to annotate it while I was recording it for you, I highlight this area here and I don't get a chance to throw the rectangle on this candle's low and this candle's high. It's a little off. Look at the recording, you'll see. It's not anchored properly. And because I see that we're now dipping in here, I'm like, okay, I want to catch it on a buy stop. So I go in and I put in a order to buy it as it clears and should breach the consequent encroachment. I want to be in it should it do that. So I hurt and grab this and do something like that when it's trading here. So if it's going to go, and if this really is an inversion fair value gap, it's going to be treated as like a springboard. I want to get in there on a stop as it proves it's going up. That way, what it's doing is if it just drops out of it and goes lower and attacks these relative equal lows, I won't be filled. I'm buying the strength that the inversion fair value gap should prove to me with delivery of price because it's already wicked outside of it. See that? So in here, running up and then we're back down in here in this consolidation, which side would you bet on going to relative equal lows or the relative equal highs, but into the area that was not delivered yet on that old daily volume imbalance? At the beginning of this live stream, I showed you that if you were one of the individuals that were saying that the volume imbalance was completely closed in already, it's because you had it set wrong on your daily chart. You had settlement toggled when I didn't. And I told you at the beginning of this live stream, and I said it in other instances in Twitter Spaces last year, and I said it in other lectures on this YouTube channel where I look at the difference between both, and I told you how I use that information. Whichever gives me the wider range, okay, whatever gives me the wider range for inefficiency, or if it's a body for an order block, I'll look at both, and whichever one's, like if it's a bearish order block, I'll use the higher one. So if it's going to trade up to a higher opening price for the up close candle that makes a bearish order block, if the context is there for it to be an order block, not just any up close candle, it's a bearish order block, I'll use the one that's higher, and I'm toggling that set to settlement price and or not do it. And whichever one's the more of a range that I have to make compensation for, that's the one I'm going to use. So I might miss trades because I do that. And that's sometimes the result of me trading that way. But it's okay. Not getting in a trade, even if it runs 250 handles, is so much better to sleep on than getting in a trade, losing, pushing my will in the market, taking another trade, and then keep getting beat up doing it wrong. I'd rather miss a move that would have been profitable and not get filled doing the right thing than trying to do something over and over and over again that won't make money. You know what I'm saying? Like that, I can accept it. My ego is hurt a little bit because I know when it does take off and have these big runs, I want to be able to say to my wife, like, oh, that's right here. You see that? See who you're fucking married to, broad? See that? I call her that all the time because she's broad-chested and it's not a derogatory statement. But some of you in the listening audience that are women are be like, wow, that was really rude of you. You just lost a lot of respect. You don't know the dynamic between my wife and I. Okay, trust me. She knows who butters her fucking bread, okay? Oh, I'm twisting it. I'm trying to get all kinds of drama started up today. I'm really not. I'm just having fun. But I wanted to be a buyer on the upper half of that inversion fair value gap. So because I saw this candlestick here, and I didn't readily see it, when I first saw it, because I got 52-year-old eyes now, and I still ain't got my prescription, I don't know why it's taking so long, maybe because it's the supply chain issues, but it usually takes about a week for my glasses to get filled, and it's been longer than that now, and I don't know what the hell the holdup is, but I'm 2 prescriptions behind where my eyesight should be better when I get my glasses. When I first was watching it, I thought that these candlesticks were actually closing closer to these bodies, so it didn't register as strongly as it did when I realized, and I was like, oh shit, it has already done it. Like it's done it. It's went down below the bodies here. It's already did the rejection block. That would have been a better entry for me. But because I missed it, I have to now look at this gap that's now here at that candle's close. Right there, I'm noticing it as I'm looking into this candle, and I'm like, shit. I have two options here. Fix the fair value gap and have it anchored like I have it here, or just go in and just get the fill. So my mind said, if it's going to go, I want to do it on a buy stop. So it means it's got to trade up to my level, like a buy stop would be used to protect a short position. That's the entry mechanism I used. And I was doing it inside of this inversion fair value gap. So in other words, I wasn't looking at it as like it was going to go up here to go down. Initially, I was looking for reasons to try to maybe suggest that it may do that and then catch a smaller immediate rebalance or a fair value gap on a 15-second chart after it respected it. But when I looked at the candle, I was like, oh shit, actually, I'm reading that wrong. I'm going to go in there and treat it as an inversion fair value gap. So I couldn't get it drawn out properly, but you can see it was me obviously buying it. So I went in, put in a buy order on a stop. It fills me. And then you start seeing me measure this wick over here. So I'm looking at this wick thinking, okay, it's gone above it. Now I'm going to try to add to it, and I'll put 4 more contracts on as it touches consequent encroachment. I wanted to see that as an opportunity to do so. Go watch the recording. You'll see me doing this. But this thing just starts saying, yeah, I'm going up. And you missed the train. If you ain't already on, you missed it. So it goes up and then eventually finds its way to the high end and then blows out the high of it. And then immediately, I said this in Tanja Trade's live stream, but I don't see her chat. And I didn't know you could do that. I thought when you do a live stream, you can see the chat. But apparently there's a way to make the chat not visible, whatever. But there's a large number of you in there. And when I say something, everybody notices it. Even the ass munches that want to make some comments. ICT, I can't trade here. I can't trade like you, ass backwards, my head on my ass, but I can trade well. And I called the sell side. I said it'd be nice if they could take out the sell side level. And I'm sure as I said it, people are like, oh, he called it lower. But I wanted to see it do this type of thing here up to the top of the volume imbalance and then give me something here. But it really blew out really high. And then all of this, it was so fast I couldn't. Well, I know you're probably thinking, well, didn't you just show us what you did? So I went in buying. Look where the little caret that appears when you highlight your little buys and sells. When you hover over top your arrows, you can see this is not market replay. Okay, and look at the bottom of the chart. It's not the same thing you get when you do market replay, where it has like a play and rewind button type shit. That's not what we're doing here. So this is entering on a stop at the high end of the inversion fair value gap. So I'm getting in on a stop right there. If it's going to go to that level, I'm probably going to be on side, and it would have to be drive up into this here. Once it takes that high out, I'm watching this wick. I want to see it trade above consequent encroachment that wick. And then I wanted to, and you'll see me, I'm doing the fib on this, and if this thing's like, it's Elvis has left the fucking building. It's gone. It's taken off. Well, I knew at that time I was going to get another pyramiding opportunity, so I just had to work with it. And because it was happening so fast, my mind said, well, what do you want to do here? Do you want to take half off? Do you want to take 2 off? Do you want to take 4 of the 6? What do you want to do here? So I was like, well, fuck it. I'll peel off 4 here, and I was trying to time it right when it touched the upper quadrant level there. So I took that off there, and then finally the limit order fills, and you watch that in the video, and it fills at the high end of the volume imbalance here. All this move here I was not able to be a participant in. I didn't capture any of that move clearly, and this was too fast. It literally was too fast. I was setting this recording up to make the video to go on YouTube when this was happening. When I signed back in to the trading view, once the video was being uploaded to YouTube, it had already been down here. I'm like, shit, I missed a really good drop. Like, man, that sucks, because I wanted to do both sides of the marketplace. So, okay, I waited. And I sat and I watched Tanja trades on her live stream, and she took a long, which was, in my opinion, a little aggressive, but it's okay. She bailed out, I think, in this area here, which I was hoping that she would. I didn't want to I don't like to tell her when she's doing anything on live stream because I don't want to influence her. But I was a little nervous that she was going to hold on to it for a longer period of time. But when we trade up into the low of that volume imbalance, that shaded in yellow area, okay, what I was watching, and look real close, okay, as we traded up, look what the high of this candle is right there. You're going to look at this value right there, 19,000. What is it? 19,894 and a half. Okay, and the lower quadrant level is here. So it's not touching it, is it? Is that body on there? I'm sorry, not body. Is that wick on there? Touching it? Nope. So what does it do? It trades down. Okay. So what's an ICT order block? What is an ICT order block? It's a change in the state of delivery. Now, I'm going to put the execution back on again. We do not hit it there. And then this candle does what? Comes all the way back down and crosses over that candle's opening price. That is when the algorithm changes. Now we're going lower. We've done the delivery to the buy side, trading right back up into what? The old daily volume imbalance. It's using that same PD array. It's not support and resistance. Nothing in here support and resistance. It's trading up into that. And then I'm waiting for the price to do this. Cross that opening price. Once it does that, these two consecutive candles is my real order block, which I got a text message from Caleb the other day. I think it was yesterday. I don't know if it was yesterday or yesterday evening. I can't remember. But he sent me a little screenshot of ChatGPT or ChatGP. I don't know what the fuck it is. It's some kind of algorithm. And I guess it's like Wikipedia where everybody can contribute to whatever. He was trying to show me that order blocks. And it says, nobody's really associated as the originator of it. The fuck they ain't. It's mine, baby. That's fucking all mine. The point is this. Nobody else can tell you what an order block is. I can. And I want people that think they know it. And here's my open challenge for all of you listeners. If you know somebody that says they understand what an ICT order block is, pray tell. Please tell me who they are that they're live streaming, and I want to see them call order blocks live. I will go into their chat. I will be polite. I will not ridicule them. I will not trash talk them. I will not try to be ignorant or try to be condescending. I want to see someone, because I'm going to tell you right now, none of them, even my charter members, cannot tell you every valid order block. I promise you that. Can they find ones that support a trade? Absolutely. But you're talking to the Glean, Adina Glean here when it comes to, this is my stuff. And you're going to discover that what you have been hearing about from other people that want to kind of like dilute it, because they're trying to take you subtly away from the brand of ICT, so that way they can carve out their own little niche. And I get it, but I'm not the right one to do that with, because there's a lot of things that you'll never learn from me, and I'm going to keep it that way. So nobody can say, oh, I figured out the algorithm. You're not figuring me out. You're never figuring me out. Like everything, even the goofy, silly shit that I do that because I know I'm going to get gears turning. But I'm literally 25 steps ahead of every one of you. In my analysis, I'm so far ahead in where price is going to go. I'm just simply waiting for it to do what I'm teaching Caleb to do. Conceptually, he's doing the same thing. I know what the algorithm's likely to do in certain parts of the day based on time. And I'm waiting for these things to materialize in a chart. When I'm doing these live streams and I'm talking over live price action, Caleb has the benefit of watching when he can. He can't do it all the time. But when he's not at work or when he's sneaking and I don't want him doing that, he's watching me talk about very specific things. And then he's looking at delayed data. He does not have real-time data. So he can see me call something, and then several minutes later on, he watches the candles form. So he has the benefit of knowing that Dad said this. Now I'm waiting for the chart to present that, and then I'm going to watch it as it's happening. I'm going to watch it. That's how you should be using these live streams. When you're watching the recordings, do the same thing. Even if you watch it later on, you can't watch it live or whatever. That's how you should watch it. Rewind and keep rewinding that spot that I'm talking about something about price. And then you watch the candles, because I'm looking at a 1 minute chart. That's a very, very low time frame. You don't need the less than 1 minute. 1 minute's going to give you a lot of details, but you're watching the fluctuations of every one of these individual candles. So when we traded back up into that volume bounce low after this big drop off, what's the likelihood of where price is doing this? Is it more likely that they're going to come back down and sweep below the sell side here when we trade at this level, or continue up and take out that high? What do you think the likelihood of this? Clearly, it's going to be exploring the downside, sell side, okay? Why? Because we've been going up for a long time, and we finally worked our way to and through that daily volume imbalance. So it's exhaustive. It's like, I'm just going to throw it all up there and be done with it. And that's what they did. They just pumped it up there real hard and allowed a heavy measure of distribution come in the marketplace. I knew this, and watching the market trade back up into the low of the volume imbalance, then I wanted to see, does my order block give me my signature of when it's going to be good to sell short? Up close candles, your consecutive, opening price, that's your change in state of delivery. It right there gives it to me. It does not, listen folks, it does not require a close below. Okay? It doesn't require that. It's not an engulfing candle that does, fuck all that. That's not what's going on. There's other things that are distinct away from the single up close candle, or in this case, when they're consecutive. All of this is the entire order block. Okay? That's the entire order block. But your eye goes to the opening price, the lowest opening price of the consecutive candles. In this case, it's this right there. When it takes that out there, all it does is have to breach it. That means trade to it and below it, one tick. That activates that right there. And my eye goes right to that, because everything going forward, the algorithm is going to refer back to that same price. Watch. Man, this is almost like a paid mentorship level. You feel like a charter member right now? I don't even deserve this. Why is this guy giving this away for free? I know. It's probably because I got money. So we have the opening price here, and this candlestick crosses over it. Right there at that point, as of 11:16, we are now in a sell model. Okay? This candle, we open right at the low of the volume imbalance. We open, trade up a little bit, come right back down. Next candle, opening, rallies back up. Does it take the rejection block? There. Because if it takes the rejection block, that nullifies the order block. It completely undermines it, says, nope, don't do it. If I have a trade open, I will kill it. Find that in my lectures. Charter members have no idea. That's the first time they heard it too. So no one's figured that out. You're hearing it now, but you're going to hear it in people talking about it in their live stream. They're going to talk about it in their mentorships and stuff, but it's all here. You learned it today, August 22nd, 2024. And then right here, we cross back down. In here, we do not get the rejection block. And as it was forming lower, as I'm aiming right towards the low of that, I'm getting two things at one time. Failure to get the rejection block, because it should have did its spike right up in it, bang, and done. Because if this is about order block, it should not go there. And I'm waiting for that. I want to see it. Okay, it's wonderful. Drop. Right there's my fill. I'm eyeballing it, marketing in. And I'm trying to aim it as it's hitting where the body is starting to drop down, drop down, drop down. I'm trying to aim at it as it's hitting the low of the volume imbalance. That shaded yellow area. That's the same section on the daily chart where there's a section where there's no bodies that overlap or connect. It's just the wicks. Everything we talked about this whole presentation today. So then we close here below that price. Every time we hit that, does it support lower? Lower high, yep. Lower, yep. Only going back up into this candlestick here. Sell off. Adding to it. I'm pyramiding. What am I adding into? I'm adding into the low of the new day opening gap on the 20th, right here. Oh, but look at this. You had a little bit of retracement. Right. My larger position's up here, 6. I'm not underwater. It never goes into a negative. It never. Do the math on it. That's why I go in with the higher portion larger first, and then I can pyramid down here. I can take a little bit of heat on that trade. It's not taking me into negative $1,500, negative $2,500 and hoping and praying. That's not happening. The market breaks lower, comes one more time. What is it hitting here? That's the daily SIBI high. Hits it here. Here. What's this? Rejection block. There. Sells off. What's below here? Sell side. What's these levels here? New day opening gap. When do you get that information? 6 p.m. on the 20th. I'm aiming for sell side below here, and I'm trying to reach below to take this sell side out below here. How did I get to that level? These prices here. How did I get to these prices? This consolidation in here. I love ICT. I love this. I love this. This knowledge is forbidden knowledge. Yeah, it is. Here's a consolidation. I want 1/2 of that consolidation out. That's a standard deviation. Oh, ooh. That's a pretty good place to take profits, isn't it? As it's aiming in, hitting it, I'm trying to get out with the sell side. I don't care about all the bottom tick, scavengers. I don't worry about all that. Your heroes don't have trades like this, folks. Okay, I promise you that. They don't have it. They have mentorships, but they can't trade like this. They cannot trade like this. Period. End of story. Not happening. Okay, so I went long based on experience, and I knew that it pulled some shenanigans is basically what it is. I knew this was manual intervention. That I knew they were going to gun the high. I knew they were going to probably take it up to the high of the volume bounce. I knew that much. And then it was a little overzealous on the upside. So I was right about picking the time when they were intervening. I am not able to do this consistently, but there are few times, and I mean this very, very few times, when the markets are conducive for having these seek and destroy events, which the characteristic of this week is what I told you on Monday in our live stream. I said, be aware that we have Jackson Hole Symposium. Jackson Hole Symposium. So if you look at the economic calendar, you'll see it looks like this. Anytime going in the future as a trader, when you see that the economic calendar has that on it, you're going to have delivery of price that will overlap back and forth, up, down, up, down, up, down, up, down. And it can invite the conditions that is seek and destroy. If you take trades, okay, if you take trades that if you don't take partials, let's put it that way, you're going to give up the best wins and you'll overstay your welcome. I proved this yesterday by having a trade on and telling my students what I was looking for. I wanted a little bit more overzealous target. I had a runner, still trying to squeeze a little bit more juice out of the lemon. And it finally came back and took me out of what I was aiming for. I don't think that a Jackson Hole Symposium week is a week that you should push real hard on, because it takes a lot of experience to find a good setup and not get overlapped. That means like when you see a price run where it goes like this, it runs up, comes back down, doesn't take the low out, and then runs right back over top of it. Just look at the price action over this week. Promise, when you look at it Saturday, how we've done intraday price action, up, down, up, down, up, down, it's overlapping. It railroads back and forth. And it's like wonderful setups there, but you have to pay yourself. You got to get something out of them or you'll get your ass handed to you. So because of that, you want to see far less trading. Okay. And since we had day one of the symposium today, tomorrow's day two on Friday, and then Saturday's day three, you want to try to do your trading at the beginning of the week. And if you're going to do anything in the latter part of the week, you want to be very, very light-handed and not have a lot of leverage on. And don't trade a lot. Get one good setup, be content with that, and paper trade the rest of the time. There's nothing wrong with that. Tape read. Don't even push the demo. Just observe it. And don't think, wow, I could have missed that. I missed that move. It was a big move. There's always moves. There's always moves coming. But if you take a loss on a week now that I've told you that this is the characteristic, and you still try to push the envelope of risk and over leveraging and frequency of trade and over trading it, you're going to think, man, ICC, he's a dick. He told me this was going to happen and I still did it. And you're going to blame me, but you did it wrong. You crashed into the tree. You drove drunk. I didn't put you behind the wheel of your trading account. I'm telling you, don't drive. Just try to do it at the beginning of the week. So that's a week when we can do what? Trade on Mondays. Now, if Jackson Hole Symposium starts on a Monday or any one of those 3 days of that symposium is on a Monday, you don't trade a Monday. Absolutely don't trade it. So I went long, and then later in the afternoon, I went short. Six contracts or so came out, and then I got stopped out on the bounce of here. So I covered five and one more, and then the trailed stop loss. I was giving it room to see if it can overlap a little bit of this. I was hoping that the new day opening gap would keep it at bay, and then finally it stopped me out right there. That's where stop loss is there. Now this one was something I was sharing with my private students to kind of like anchor, because they're part of a community that is beyond what this is. I was teaching them early in the beginning of the week, also telling them that just be mindful that this week we will see overlapping price. That means it'll go back and forth. And whatever price run was before the one we're in now, it's going to go over top of that and run potentially whatever stop was there. So I did something that made sense technically, shorted at a really good level based on sound logic, added to it based on sound logic, good risk management, no over leveraging, no crazy town like frequency of trade, and then targeted the liquidity, majority lion's portion of the move taken below old lows where smart money traders are going to distribute their short positions. And then I allowed the market to come all the way back up. Now, truth be told, I wanted to see it come down here, and I was going to start doing partials right into here. I would have took one off of the remaining four, and I would have took one more off below these lows here, and I would have took one off here, and then I would have had one contract remaining to see if I can get below here and then reach for the target I had. That's how I intended to trade it, but it came all the way back and got the balance of the four contracts of the 10 that I went short here, 6, added 4 more here. Let me highlight it right there. You can see it. Look up here, right up here. That is a closure, and then that's a closure right there. And then the balance of the remaining 4 of the 10 contracts were stopped out there. So that's over $17,000. Buying it long, I would have shorted it here had I been in front of the charts, but it was too fast for me, way too fast. I was thinking I was going to be able to upload the video because it was real short. I compressed it real quick, and then it took like 30 seconds to compress and make it in Camtasia, and then started on the server upload. And I came back to the charts, and I was expecting to do something in the upper half of the volume imbalance to get short on, and it just said, oh, hell no, lower. And then I had to wait for this objective here, which is fine, because I would have wanted to short up in this area and then use the lower end to pyramid. Like I added it here, where I went 6 here and 4 here. I would have done 6 in here. If it would have offered me something on the high end above the midpoint, which is that red line, if it would have gave me another fair value gap to trade into or institutional order flow entry drill, I would have went short on that. Or if it would have traded back up into this wick, half consequent encroachment, I would have added there. And then as it broke lower, the last pyramid entry would have been trading what I have here. If it would have given it. It may not have given it though. But that's my thought process. So I can say that to you because you can see my executions here. You can see my other executions. You can also see how I'm calling price action live, giving you the details of why it should behave a certain way and why it shouldn't behave a certain way. And then you watch it pan out. So I'm going to ask you, do you believe that there's an algorithm that controls price? If you do believe there's an algorithm that controls price, do you believe that they somehow changed it? Do you see traps being formed? Do I look like I'm being trapped by anything? Does this look like a man that knows something about the marketplace, or does he look like he's falling into traps and snares? Does it look like that this person that's talking to you over live price action, not market replay, not hindsight moves, not a textbook, here's a picture in a book that's static and who knows when it was. I'm talking to you with real price action over live feed with low latency. That means from the time it happens in real time and you seeing it with my live stream. And if you have live stream that's occurring, I'm already talking about it before it gets there and how it should behave. And then there it is. So do you believe that they've changed an algorithm, if there is one, or if you don't believe there's an algorithm, leave a comment. I promise you, as long as you're respectful, I'll still be able to see any other comments you send me. But if you send me some stupid shit, some dog shit kind of post or whatever, all I do is click hide viewer from channel, meaning I will never see you. You'll be able to leave a comment. You'll think you're leaving a comment, but I won't ever see your horse shit again. I'm here to teach, even the people that don't like me. I'm here for you to learn how to do this stuff the right way, how to read price action the right way. And if you feel like that what I'm showing you isn't valid, we'll make a case for why it isn't. You want to make videos about me? Okay. Tell me where I did it wrong. Make the video about it. Okay. I won't do a copyright strike. Don't do the whole video. Just do little segments of it. And I promise you, for everyone that does that, there'll be an army of other people uploading parts where I really said it in proper context. And I'll wipe you out that way too. I want to see it. I want to see the guys that can do this stuff do it live. Call it out live. Explain it. What's the logic behind it? What's the narrative? Explain why it should behave a certain way. I mean, look at that move. Look at it. Were we long today? Mm-mm. Gap. Multiple things added to it. All in here. Fair value gap. Rejection block. Sell off. Reaching to new day opening gap. I think that's a sell side. Yeah. And I think that's going to be it for today. I think I've done a fair enough job today to shit on everybody that says there is no algorithm, that price isn't controlled, and that there are absolutely zero traps. There are no traps for smart money concepts. Let me see if I can say this in a very diplomatic way. You're a fucking idiot if you don't recognize that there's an algorithm. You're a fucking idiot if you are trying to make a band-aid for your inability to know how to use it properly and time it and make the excuse that they somehow changed the algorithm. I'm the guy that created this stuff. This is my whole entire life's work. I codified these things. Me. I did. You can see it in you can hear the authority in when I'm talking about it. That's why it sounds arrogant, because it's mine. And I know, and I've been watching, it's being abused. And these people don't know what they're talking about. When you have a better understanding, which will take you a little bit of time and effort, it's going to take you effort, you will have the confidence that is lacking in every other approach. Because what you're doing is you're placing faith on a pattern. I don't believe in a pattern. I don't believe in any fucking pattern. I believe in time when it should move, and I believe in price, in efficiency, liquidity, inside the spectrum of a market structure that either is implying that it's going to go higher or lower. And where is that derived from? The daily chart. It seems like there's a whole lot of things to balance. That's because you don't know what it feels like to hold a piece of china, one plate, one piece of fine chinaware. And you don't know what it feels like to hold that dowel rod that's 3.5 feet in length. And you don't know what it feels like to take that one plate and spin it on the top of that dowel rod and maintain that one plate and keep it from falling and breaking. And then getting good at that with one, and then trying it with the second one, and getting good and being able to hold both of them spinning without dropping them and breaking it. And then adding one more. And that's exactly what it's like learning how to trade. Every aspect of trading is never learned quickly and just right away, just like that. And anyone that markets to you that they can do that for you, listen to me, folks. And I mean this. In Jesus' name, I mean this. They're lying to you. They're lying to you. They're trying to do anything they can to separate you from your money so that way they can eat. I promise you that is the truth. Because if they knew what they were doing, if they really understood what they were doing, they wouldn't be begging you to pay them. They wouldn't be doing everything in their power to take your attention away from me, who's giving it to you for free. And look what it's doing. Look what it's doing. Are you not entertained? Are you not seeing the proof that there is absolutely a way to read price action, and it's so perfect? How the hell could the market react to these levels like this with the logic, foreknowledge, knowing that it's going to behave a certain way? How could anyone know this? We've already canceled out all the bullshit. It's this person's content. It's that person's content. It's this, it's that. And every single time they strike out. It's not there. It's not anywhere else but coming out of my mouth. It's in my head, codified by good old ICT. And I'm giving it to you for free because I got the permission from my son. I think to myself every time I lay my head down, like, I honestly expect, not that I tried to raise greedy, self-centered boys. I didn't. But I thought for sure they'd be like, no way. With all the shit that they've seen people talk about me and stuff. Like sometimes they would get emotional and be like, why don't you do this and do this? I was like, because if I let them stay like that, I have a counterpoint to make arguments against. Is forever, ever, there's going to be people that's going to say something about me. They're going to say there's no algorithm. They're going to say I can't trade. They're going to say I can't call it live. They're going to say I can't produce profitable students. Oh, I've done all that stuff, and they still come up with some Mickey Mouse shit. It doesn't take it away. It doesn't change it. And it gives me a perfect soundboard to say, listen, you're either going to be the camp of understanding this stuff is real, and you're going to progress and learn for free, or you're going to be the person that says, I have to sell something because I can't do what he does. So I have to sell something on my own. So I'm going to shit on him and do drama marketing. And that only lasts for so long until you're exposed as an unprofitable dick fucking fraud. Or people wake up and say, yeah, you really don't have the Kool-Aid. I'm sticking with ICT. I'm drinking his Kool-Aid. I got the best Kool-Aid. And it's for free. My lemonade stand has the best juice. And it's for free. All I got to do is show up. All you got to do is show up and hang out. I'm giving you stuff that you never would learn. I'm proving things conceptually over live price action. And it's not both sides of the marketplace. I'm teaching you narrative. That's the stuff that cannot be taught in a book. It cannot be taught in a book. I could write 50 fucking books the rest of my life. I would never be able to scratch the surface of you watching real time what price candles are doing real time as they deliver. How to monitor. Okay, watch when it goes here. You want to see it do this. You don't want to see it do that. But those things can't be communicated in a static picture. Think about that. Some of you have such high hopes about these books. And you're thinking, I'm just going to wait for the book. Like that's somehow going to give you a quick, jump ahead to the front of the line in understanding. That's not happening, folks. Not for the lack of wanting it to be like that, because if I could, I really would. I really, I really would. It'd be so much easier because I want to see what you do with the information. Clearly, I've made millionaires with this stuff. Millionaires. Okay. I'm not the mentor of your mentor. I'm the mentor of millionaire traders. I'm the mentor of mentors that while they're learning how to do it, they sell my stuff when I give it away for free. Make that make sense. That just goes to show the level of just lunacy that traders have when they get in this industry right now. Here's it for free from the guy that created it. And here's other guys out here saying, I'm going to teach you how to do it easier, faster, simplifying it. Have them come out and do what I'm doing. Outline the logic, the whys, the why it should and the why it shouldn't, and when it should happen and when it should not happen. And I'm here with it, watching. I want popcorn at the ready because that shit ain't never going to happen. Every mentor that's selling a mentorship right now, if they are not giving it to you for a couple months for free, proving that they can see it, outline it, and give it to you in pristine detail, they are not worth your fucking time, let alone your money. And if that hurts, suck it the fuck up, Buttercup, because that's just the reality. That's the reality. Shit's too expensive now, man. Shit is way too fucking expensive and shit's too deep for people to be fucking around with some fraudulent fucking wannabe mentor. If you can't do it, if you can't explain it, if you can't make it make sense real time, you have no voice. And you certainly don't fucking deserve to have my fucking name a part of your shit. So yes, I'm dipping my dick in your cornflakes and I'm pissing all in it because the ones that can really do it, they're not going to be offended by that. They'll be like, you know what? For the people that want to go with ICT, there it is. But if you want to see the way I'm doing it, and I'm going to come out and prove that I can do this too, you know what? You get a nod from me. I won't shit on you. I won't say nothing about you because you've earned your spot. You've earned it. But everybody wants my logo in their fucking thumbnail. Everybody wants my fucking name in there, either for fucking drama purposes. Oh yeah, ICT doesn't fucking trade. He's unprofitable. He's the, like, these motherfuckers know me. Like, you don't know me. You don't fucking know me. None of you know what the fuck's going on. None of you do. But I love the ones that absolutely care to learn how to do it properly. That have taken notes and they took the initiative to go out there and say, I'm going to carve out my own model. I didn't forget who I learned it from. I'm not blowing ICT in front of everybody just to get a nod from him. I give him his flowers, say, hey, you know what? Thank you for helping me. And if anybody ever asks, how'd you learn this? ICT. And then you go right back to your business. When I'm in other people's live streams and they start, oh, ICT, like I'm a fucking celebrity, I quickly focus on your stream. I'm not a fucking celebrity. But if I want to make myself known in your stream, when I do that, that's not an invitation for everybody to stop listening to the people I'm in there watching too. I'm curious. I want to see what they're doing. I want to watch what they're doing. Because if they're using my information, I want them to teach it correctly. And if I can help them without managing their trade for them, I'll do so. I just don't know how anybody would want to pour money into something when it's being given for free. Like, you're getting it, the purest form of it, where it's in a manner where you can judge it for free. I can see if I come out here, and I've done this. If I come out here and I play silly, like, oh, yeah, this is like, I don't know, it could do that, it could do that. Well, I don't know about it. Yeah, okay, that's somebody that doesn't know what to talk about. But look at the chart. Look at what we were doing today. Really, listen to what I'm telling you. That's not ambiguous. It's one-sided. And it was very rule-based. If it does this, it's going to do that. If it does this, it shouldn't do this, so therefore you can look for this. And I literally told you how my son would be engaging it, how he's going to use this model. where his entry technique would be applied, where his stop loss would be, and why. Why is the stop losses in your chart, in your trades, Michael? How is it that your stop losses are so well placed? Right. It's the logic I showed to you today. Everything I'm teaching in this mentorship is how I pyramid into trades, how I place my stop loss, how I read the market, how I get a bias, how I know what's the right draw on liquidity, how I can change direction, how all those things. That's what this mentorship is, because I want my son to know those things. And my other boys will have the recordings as well. And because I'm releasing it for the first time this way, everybody afterwards is an echo. Meaning they didn't discover it. They didn't find out. I love my students, I do. But one of the things that irk me is I see a lot of people say, I took the same trade. When you do that, I'm looking for your trade. And when you don't have that, I look at that as, okay, that's fandom. Fandom is not why I'm here. I don't want fans. I don't want, let's bump shoulders and say, hey, look, this is a move we both took. I don't high five anybody like that. If you're going to go so far as to tell me in the comment section that, yeah, I took the same trade, you fucking better show that you did the same trade. Show it. Because I don't have any respect for that. And I know the viewers, if I allowed those comments to be seen, would shit all over that. And it's justified. It's justified. And if you're going to co-sign and say, I did this like you did, or took the same trade, as a mentor, I want to see that you did, because that's a testimony that you listened, that you used the logic that I spent the time teaching, and you did it without me telling you how to do it. That's a testimony. You have a voice. You have reason to say, I know what I'm doing. Not just, hey, I want somebody to say, you did the same trade as ICT? Wow. That's not impressive. Show the trade. Show it. Show the engagement, where you got in, where your stop loss, how you manage it. I would love nothing more to see that. I love when I see that in my students. I love that. You all like it when you're watching my executions. I love watching my students' executions. To me, it's like watching my own kids, Like I'm watching them do something that my heart is in. My whole life's been in this. And when I can see someone else carving out their success with it, man, am I fucking proud of that. I am fucking proud of that moment, because I know what it feels like for them. I know what it feels like for them. And I get emotional. Sometimes I get welled up and I feel like a fucking peacock walking around. And other times I get emotional. I start crying because I'm happy for them. And if I get a chance to have the fortunate opportunity to watch them when they're live streaming and they do it and they feel good, and you can watch their fucking face light up because it worked out, you know damn well what that feels like. And you can't describe it. No words are going to be able to be adequate enough to say how good it fucking feels. Because there's so many people out there that want to tell you, and it's not because they just don't like me or they just want to shit on you specifically. They'll just shit on anybody because they're miserable. Unless you suck their dick and love what they do, okay? But here, in this industry, unless you are really part of a good community and you're a mature person, you can't appreciate someone else's success. If you look at someone else, I don't care what they are, okay, if they're trading with any kind of other discipline outside of mine, if they make money and they're consistently able to do that, I am fucking impressed by that. I have every ounce of fucking respect for somebody like that. They don't have to use what I'm teaching. I'm just telling you this is what the markets really do. And if you happen to find a trade that lines up, that's why your trade worked. But if you are consistently profitable, doing anything of your own accord, I have a great deal of respect for that. I don't get jealous by that. I don't talk down just because you don't use my concepts. You're making fucking money. That's the whole reason why anybody should be doing this. But social media has caused the perfect storm for people to be divisive. And when I say the things I say, and I said this before, but I get new students all the time, and they say, "Wow, you're very aggressive, or you talk down to other people," and I wish you wouldn't do that. I'm not talking to you when I do that. I'm talking to the people that are in other communities that have heard shit about me that isn't true. And then when I do something like that, when I challenge them, say, "Look, your shit's Mickey Mouse. It's bullshit. Mine's the real stuff, and it would smoke you." What's that going to make them do? They're going to say, "Well, I want to see where it's wrong." And all of a sudden, I have a convert because they start seeing shit they never saw before, and they're convinced. Not because I said so, because they see it in the fucking charts. They're watching it happen in their own charts. They're like, "Oh shit, this really is better than a fucking rabid wombat pattern." Hello, there's something else going on there, and it's not a zoo pattern. And I provide the opportunity for you to have that moment of astonishment where it happens in your own hands. That's the magic. That's the part that you need to happen in your own study. Because when you have that first initial moment of astonishment where it's like, wow, you'll lean on that throughout your entire career. And then you'll get more of them. And you'll have them in your journal. And you'll share them with other traders. Say, "Hey, look, what was the biggest epiphany moment for you when you were learning how to trade?" "Oh, it was when I was looking for these fair value gaps. And I couldn't see them. And I saw all these different fair value gaps. And all of a sudden, boom, it clicked. I was able to see the right ones, and it became easy. And I didn't know how it was going to happen, and I couldn't even expect it to happen the way it did. But just because I was in front of the charts all the time, it was like it finally made sense. And that's what I'm talking about. Like, it's going to happen for you, but I can't tell you how long it's going to take for that to happen. And some of you, and let's be real honest, Michael, most of you are not giving yourself enough time to get that moment. Because when it happens, that's when the trading bug has bit you. Now you're a fucking mutant, okay? You're going to be out there chasing every opportunity to be a web slinger, just like Spider-Man, okay? You're going to be slinging around in these charts, looking for new opportunities to be able to test the theories that you're learning about. And when you get more experience and it's building and building, it's infectious. And you start talking to yourself in a positive tone. So you know what? I'm making progress. I am not wasting my time listening to people talk down to the person that's sharing this for free. I'm asking nothing. I'm asking nothing. I'm doing this for my son. You don't have to watch my videos. Nothing brings you here but your own morbid curiosity or your sincere desire to learn it. But it's going to be a default result, the cause and effect of you spending time here doing the things I'm teaching my son. If you mimic this, your understanding on how to read price action clearly, properly, accurately, and how to determine what it's likely to reach for will go through the stratosphere. Like you won't realize how fast your learning will go if you stay out of the toxic stuff. If you stay out of all the what if thinking. Don't do that. What if you do well by learning this? That's how you should think. What if you learn it faster than you thought it was going to take you? You got to replace all that toxic thinking with positive self-talk. And you do that through your journal and then while you're watching price action. When you feel like you missed something, just remind yourself, you know what? This is just one day out of over 200 opportunities in a whole year. Of within how many years do you anticipate living? I mean, obviously tomorrow's not promised to nobody, but nobody plans to die tomorrow, right? Nobody plans, "Oh, I'm going to live 14 more years and that's it. I'm going to give up the ghost." Nobody thinks like that. So for as long as you think you're going to be alive and you have your mental faculties, that's the opportunity that's in front of you. So don't rush to get to, "I can push a button and I can get it right sometimes and it'll be enough for me." No. Your goal should be, "I'm going to be bored out of my fucking mind because I know that this is what's likely to occur. I've seen it so many times before. And when you finally fund an account with real money, or you finally get to a decision where you want to take a funded account challenge, you know that what you've been doing already works and nobody needs to convince you of it, and you don't need to listen to me cheerlead you on. You've seen the fruits of it. You've back tested it. You've forward tested it. You've tape read. You have demo traded it for a minimum 3 months. You have the data to support the idea that you yourself can engage with price using the information. And you stick to the rules that you've laid down for yourself. You don't deviate from it. You don't bend them. You don't try to do more to impress social media. You're not even worried about social media. That's the right mindset. That's the absolute mindset. And if you don't want to learn from me, apply that same logic to whoever you want to learn from that's proven they can do it to you. And I mean that sincerely. It don't have to be with me. You don't have to learn how to trade with me. But I'm not going to lie to you and tell you it's Bollinger Bands causing the market to do this or doing that. It's not. I'm not going to make up some horseshit around an indicator to justify why the market does this or doesn't do that. All these different trading disciplines out there, okay, all of them. If you use sound money management and you don't overtrade or over leverage, anything can be made profitable. And unfortunately, like I learned in the very beginning, I attributed the indicators, the oversold bullish stochastics on a 1 hour chart. That was the secret sauce for me. And it was just because the market was going to go up anyway. That's it. That's the only thing that happened. And I didn't get stopped out the times I won. And I wore blinders on. And when I lost, I should have been studying why I was losing, but I was focusing on studying why I won. The greater lessons for me would have been studying why I was doing it wrong, because it was staring me in my face. Everything I've been teaching on this YouTube channel were all the things I was ignoring that could have made me so much better sooner and kept me from losing fortunes. I've lost more money in the early stages of my development than some of you will probably ever make. But I still kept going. And I didn't have ICT telling me in videos, do this, and you'll be fine. Keep doing it. It'll work for you. It'll work for you. I didn't have that. I had tears, crying, anxiety attacks, eating disorders, ulcers forming in my stomach, irritable bowel syndrome. I had all that. That was my companions while I was learning all this stuff. That was what it was like. Books didn't satisfy me. Nobody knew what they were doing online. They weren't telling you. Like, I'm talking about things that repeat every single day. That you can go in, measure it, study it, see the influences over it, and then where in these runs do you find your setup? There's lots of trades in this, man. Lots of them. And I know enough to know that it's not appropriate for me to force you into any one of these specific ones. But because Caleb needs that structure to start him, I'm forcing him into fair value gap. So it's the first fair value gap that forms between 9:30 and 10 o'clock. Is that complicated, folks? Am I hiding it from you? Am I lathering it all up and hiding the real thing he's looking for? No. I've been honest with you. I've been very straightforward, and I've made it very detailed. Like today was very, very, very detailed. But it's the first presentation of a fair value gap inside of 9:30 to 10 o'clock. That is going to be his setup. That's his thing. Okay, that's his modem. Not his modem. His model. I was thinking modem because I watched this little short on YouTube before I got on here today. It showed a 1993 desktop computer, and it was loading up, turning on for the first time, and it's going through all of its login and startup, and he was loading up Doom, 16-bit, and it was like, man, that sends me back to memories and stuff. But it made me think about when we had old modems, when American Line came online. I know I digress, but I have to do it because it's just one of those things. When we had American Online when it first came out, everybody had a modem. They had to plug their phone line in, and you hear this, all that terrible handshaking that it would do when it was connecting to the service. It didn't make that sound. It was like some kind of song playing, but not that you needed to do that to play Doom. But I was thinking modem. It's been in my mind all morning. Like, wow, look at the technology we have. Like, I'm literally talking to you. You're all around the world, different places, all at the same time hearing me talk. Within 4 seconds, you're seeing and hearing everything I'm doing. Like, we're really in the age of the Jetsons. That 80s cartoon, George Jetson and stuff. And they could talk to each other on the TV or in the palm of their hand. That's what we're doing today. Isn't that wild? I mean, technology is amazing today. And you have all the advantages that I didn't have. So if it took me years to figure out all this stuff, and I know the Lord had his hand in it, that was my mentor. That was the one that said, look here. And I heard it. And that it might be unsettling for you. It might want to say, okay, I'm done. You're talking about Jesus, I'm out of here. Goodbye. See you. But that's who kept me in it. Because I didn't have the money to keep doing it. I didn't. I had to work real hard to replenish those accounts that I kept dusting off because I figured it out with a new indicator setting. Oh, I was doing it with the wrong indicator setting. I got to do it with 14 smooth by 3 by 3. That's the one that's the cast. That's the secret one. That's what the smart traders use. You should have saw some of the stuff I believed back then. It was nuts. It was nuts. What you see me able to do and describe and teach and what my other traders and students can do, that was unheard of back then. Nobody, and even still today, even before I stepped out, nobody was able to do this kind of stuff. And that's how you know the hand of the Lord's in it. Because if he wouldn't have opened my eyes to it, you wouldn't have never known it. It's a fantasy that never would have materialized in anybody's mind. And I didn't have the expectation that this would even be possible back then. That's not what kept me going. Each little thing that was being shown to me and revealed, this is what happens in the marketplace. This is how it can be capitalized on. Okay, well, let's codify something around that. Boom, there it is. And when my upcoming as a trader, transitioning from open outcry pits where nothing was electronic, everything was calling in your orders from a phone, I had the unique perspective and timing to be a part of that electronic transfer from open outcry to electronic trading, and then eventually 24-hour trading where you have it now. And not technically 24 hours, but we'll eventually be there. And when they do away with that gap between 5 o'clock and 6 o'clock, because if we live long enough, we'll eventually see that go away. There'll be 24 hours trading. It won't change anything. There's still going to be imbalances. There's still going to be inefficiencies. And I have other weapons and other tools. And if they ever take away the gap between 5 o'clock and 6 o'clock, I will publicly reveal something that would make an allowance for that. I have so many things. I don't need everything, and you don't need everything. You just need one specific element of trading inside price action when price should move. And whatever that is for you, once you discover what it is, don't demand more. Don't try to reinvent it. Don't try to pick up what ICT said, 81 of them. I'm really curious. Honestly, I wish I never would have said it. I wish I never would have revealed that the corpse. I wish I never would have said that. But because we were talking, I said a lot of things that I said I don't want in that discussion. It was just for him and I as traders talking amongst one another. But I wish I would never said it. But I get people sending me emails and sending me messages and texting me on my personal phone line, which I find very intrusive. If I didn't reply to you, I blocked you, just so you know. And it's not to be a dick, but I get so many people texting and calling when I do the live stream. They're trying to call and talk to me like that. But you only need one thing. If I never teach another PD array, if I never teach a new one, you have more than enough. But the problem is you think by me teaching something new, I've held the better for later. I've held the better for later. But any one of these can perform just as well as the other ones. It's when they first present themselves. That's the importance. What time of day it does it, and what's the underlying narrative, where the market's likely to behave and trade to and draw to. And you incorporate all those things, you have something so strategically advanced, far and above everything else, that it's laughable. It's really laughable what you believe as a trader is a catalyst for you to get into a trade until you learn how to really read what price is doing. And it's very liberating once you understand what it's doing, because it's like, oh, it really isn't that complicated. But your thoughts and your concerns and your fears about yourself, they cloud your mind, and you're going to waste a lot of time wrestling with those things instead of saying, you know what? My only obligation right now is to log what's going on in price and measure how often these things form. That's my only obligation right now. So that's all Caleb needs to do. He's not in here trying to impress me with how many times he can find a fair value gap. That's not the the agenda here. The assignment is you are to log price action and show me what your observations are, finding the first imbalance between 9:30 and 10 o'clock and how it is used intraday and where it was seeking what side of the liquidity. I didn't ask him to be right about liquidity and withdrawal liquidity every single time initially. That's not even part of it. The way you discover all that is by seeing pattern recognition. How does the market behave? But until I teach what is withdrawal and liquidity, which is what we've done, he now has a baseline. Okay, this is what it looks like. So then he can go through his charts after it's happened and find all that information and log it and screenshot and put his annotations on what his observations are. And as he gets more understanding, his annotations will be much more specific about things I'm expecting him to observe. And then I'll know that he can go to the next level of what I want to teach him. That's how I teach. That's what I want for my son. That's the best way. He's my son. And I really don't appreciate people trying to tell me how I should teach my son. When you've made millions of dollars, then you can tell me. Okay? When you can come out here live and call every individual 1 minute candle, explain why it's going to do it, then you can give me criticism on how I should teach my son how to trade. Okay? When you can do that, prove it to me, do it live, I'll sit down and I'll take notes from you talking. But otherwise, please don't do that because I'm not going to hear you. I'm not going to hear that. I'm sorry, I'm not going to hear it. But I've had a lot of fun today. Obviously, you see that I had a little bit of withdrawal because yesterday we weren't able to live stream. So we had a little bit of a longer session today. So if you compensate for the fact that we didn't have a live stream yesterday and average it out a little bit between 2 sessions, it's a little extra for 2 days. Okay, so we'll be back on a 1 hour, maybe a 1 hour and 15-minute duration tomorrow. And then we'll sail into the weekend with warm butterflies and kumbayas. Okay, I had fun. Hope you had fun. If you learned something today, if it's encouraged you, if it gave you some more insight about what we're doing and while we're watching price action, give the stream a thumbs up. That's your currency with me. That means that you found something here that was helpful to you. It caused you some more questions, which is a good thing. If you're watching the live streams and you have questions answered, that's great. But I want you to have more questions, because those questions are opportunities for the people that are paying attention. If you're not watching the streams and having questions arise, you're really not engaging with the lecture. Your motivation should be, how many new questions did you get arise by watching me talk about what price is doing? Because the ones that are really here try to learn, you have questions and I have answers for you, trust me. But you have to watch and study real time with me, and you'll learn just like Caleb's learning. It is not as complicated as you think it is. In the beginning, it's a language you got to learn, and nobody can have a conversation the first day. You'll fumble over it. You can't pronounce the stuff correctly. It's crazy. And that's all you're experiencing the first time here, or first few times. If you've never looked at price like this, you have to learn the language first. And once you understand the language that I use to discuss it, then it becomes a whole lot more fun because, oh, I understand exactly what he's doing now. I know you're going to say something in the presence of just yourself and nobody being around, and you're going to say what I'm about to say before I say it. You will finish my sentences, or you'll call attention to something before I do it. And when you start having those epiphanies, it's like, wow, I'm starting to get, you're right, exactly. We're thinking the same way. That means that hive mentality that I'm trying to cultivate around reading price, but I'm not trying to cultivate a hive mentality about how do you trade it. Because if that was the case, we would all be entering at the same place, all at the same stop loss, the same amount of contracts, holding for the same target. That's not what I'm trying to do. You all can be doing something differently, buying and selling in the same day and still be profitable using everything that I taught. That's the power of what I'm teaching you. It is a language to engage price action, but I'm giving you a limitless approach to building models that are literally devastating compared to everything else. But you can't recognize that yet, but you're going to. You're absolutely going to. And when you get to that point, confidence will need to be managed because it will sound like arrogance. And young men, it's going to be very hard for you to do that. And the more you're like that with your friends and family, the more they're going to think that you're full of shit and it's not going to work for you. So all you're going to do is get more of the things that you don't want. They're never going to say, good job, Timmy. Good job, Josh. You keep doing that. If anybody's going to do it, you're going to do it. They're not going to do that because they go to work just like you're going to work right now. They're going through the pain of paying too much for shit that's way expensive, and they're struggling. Everybody's struggling. So I'm very proud of Caleb to agree to this being shared because he could have said, "No, Dad, I don't want you to do that because they don't deserve it," and there it is. Okay, I would have went that route. But he feels the same pressure that all of you are feeling. He tells me, "Man, it's expensive. Gas and electric's going up. I got to pay this much to drive gas, because he has to drive to another state, and it's very expensive for everyone." And he has that same thing going on right now. So he has no advantages over you. None. He has zero advantages. He's being forced to work at a job. He's not making a lot of money. That cost of living pressure that you're feeling, he's feeling it too. And he has to learn it when he gets home and on his day off. Now, tell me, don't play with that. Take that pig from her because she's going to oink and oink. And it sounds like something I don't want in the video. Don't let her out. Leave her in there. Just leave her alone. That's what I'm saying. Just stay away from her. She's going to think you're going to let her out of the kennel. This is all the stuff that usually gets cut out of a pre-recorded video. But we're live, so it is what it is. But you have the same situation and same circumstances that he has. The only advantage is that I'm not going to let him fail. You have to earn yours. The work that you put into it, you're going to have to earn all of that. And when you earn it, you should feel good about it. When you understand yourself and you understand the market and how you're going to engage it, don't even invite other people in the conversation. Don't say, "This is what I'm doing." Like, as soon as you start showing your results on social media, unless you're aiming to be a streamer and have a source of income like that, then okay, yeah, it makes sense that you're going to show what you're doing online. But unless you're doing that, showing the world through social media what your trade was, unless you're teaching, and if you're teaching my stuff, it's kind of like cringy to me because none of you should be trying to teach my stuff, to be honest with you. I mean, it's just the way it is. But assuming you're a teacher, then it makes sense. Here's what I did in the market, or here's how I'm trading, or this is how I traded this. Okay, that's wonderful. But apart from that, if you're just trying to learn how to trade, you should never be showing anybody on the internet what you're doing. Because the chances of you getting the cheerleading that you subconsciously want to hear, like, "Wow, you did good," that's what you're wanting. Subconsciously, that's what you want. And I told Caleb, don't you ever fucking do that. The only time you're going to see what he's doing is on his YouTube channel where I sit down with him. I sit down with him and I say, "Show me what your notes are. Show me what you observed." And you're going to hear it. You're going to hear him talk about what he feels struggles with. You're going to hear him talk about where he thinks he's making a little bit of progress, or maybe he's not making any progress. He's going to say it as he feels it and what he's experiencing. And I'm going to ask him to talk a little bit about what it feels like working 12-hour days. Working 12 hours, commuting, and doing this. And you're going to think, "Wow, his dad's ICT and he's still putting him through the mill." You're fucking right, I am. Because there's no better way of learning it. You want to eat shit the rest of your life and have somebody tell you how much you're going to earn and when you got to do it? Well, go ahead. Go work. But you have to know what it feels like to avoid it. And that means once you start making money, you won't take stupid risks because you'll end up in that same situation because dad's not bailing your ass out. You go on your own steam that you earned. You make your own money that you earned. When you make it your way, by your own hands, you'll care more about it. You won't be frivolous with it. You won't take silly risks and over leverage. "Well, I've been doing real good for the last 4 months. It's time to over leverage. It says I can do 15 contracts, so fuck it, let's do it." No. Because you don't want to end up in that same situation where you got to go back to only expecting the money that comes to you on a week-by-week basis by doing 50 plus hours a week. Doing something that you don't really want to do. That is the catalyst. See, instead of hating your job, you should be thankful you have the job, because that's the motivator. It's not me talking to you. The only thing I'm doing is making you think about it. Like, yeah, if I don't really make a change today or work towards making a change, what's going to change? The date. The date on the calendar, that's what's going to change. Nothing else is changing. You're not going to move up. You're not going to move down. You might move down, might move out the door. They might do away with you. You may be fired. You may not get a promotion. Think about it. So if you made the decision to be here and learn how to do this stuff, I commend you, because I'm not going to sugarcoat shit. I'm going to tell you just the way it is. You're not going to like it most of the times the way it's been taught to you, but this is the way it needs to be this way. It needs to be like this, because when you earn it, your motivation and goal should be, I don't ever want to hear this motherfucker talk to me about trading or looking at price action ever again. I want to know that I know, and I ain't got to worry about listening to anybody else, least of which ICT. And I don't take that as a disrespect. That's graduation. That is graduating. When you no longer give two shits what ICT is saying, because you already know what I'm going to say. You already know where the market's going to go. You already know, if I was sitting there in front of you and saying, watch this right here, watch this right here. You already know that. And you're already in that trade, already taking partials. You've already closed the trade. And other people are just sitting there looking at the fucking chart, staring at it. No idea what's going on. No idea where it's going. All the multiple opportunities to enter into a trade, they're clueless. And you've already ran a clinic on it. And you've done more in an hour of trading than they'll do in a whole week, with a myriad of losses across the board. And you've done one trade a day, and you're content, and you're making people's salaries. Hello. You don't need to be cheerleaded when you know what you're doing. You don't need to ask anybody outside of you when you know what you're doing. You never go onto social media and ask for validation. That's a sign of success and maturity. Anybody that's posting stuff, unless they're an educator and they're just giving examples of it, they're literally just asking you to fill the void of something they cannot feel and get from their own accomplishments in trading. And if that didn't hit and resonate with you, listen to it again, because that's exactly what social media has done. It's fostered this environment for people that have no reason to ever expect any clout to chase after it. And when they see somebody else that has more of it, they're going to shit on them because they think that elevates them, and it doesn't. So don't even get into the fray of that. Don't even worry about it. Stay out of that. Like I told my son Caleb, don't fucking do anything on social media. Your YouTube channel is the only thing. You don't do anything on Instagram. You don't do anything on Twitter. You don't do anything on Facebook. You have one presence. It's on YouTube. Nobody can pretend to be you, because they're all going to know this is the only place that you're going to speak from. It makes it easy to manage. You're not asking people's opinions. You're not asking for, hey, what do you want me to do? Fuck everybody else's opinion. The only one you need to worry about is mine. This is it. I'm the drill sergeant. You're fucking in boot camp. And this is the way it is. You're going to eat the shit I put in front of you. You're going to eat it. You're going to say, thank you. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Never, no, sir. You're going to log and you're going to repeat it. And then when I tell you to do something extra, then you're going to aim for that. But you're going to continuously do everything else I told you. That's the process. That's the work. That's what every failed ICT student has never really did. And we'll see what your progress is. You're going through the same thing that he's going through. And some of you already feel the changes, already see the progress. You already think about it differently. And I'm encouraged because I see people saying, hey, I used to panic and worry about taking a trade, and now I love watching price action. It's fascinating to see what it's doing. It literally is marching to what you say, right? And it will do the same thing when you understand more. It will feel like you carry it on a leash. You're walking it. That's what it feels like. And it's hard to get surprised. And if you're not being surprised at what price is doing, what are you? You're bored. Because you know what you're waiting for. You know. You know that you know. And no one can take that from you. Once you get to that level, These live streams are going to be so much more immersive. And it'll be a whole different experience. Right now, you're just floundering around if you're brand new. And I know, but don't be discouraged. That's normal for you to feel like that. It's absolutely normal. It would be something altogether different if we weren't able to see things happening before it happened. Then it'd be like, oh yeah, it's justified. Just unplug and don't come back. But you can't say that. You're seeing things that are wonderfully illustrated, has context, has a narrative as to why it should do certain things and not do other things. And that is real mentoring. That is what it feels like to learn properly from a proper teacher, from a proper mentor with real experience. If they don't have the ability to do this and they're not willing to do this, that's the biggest red flag to say, you know what? Have a good day. I wish you nothing but luck, but I got to go. And no, you're not having any money from me. There it is. It's done. And I'm going to get all kinds of new level hate placed against me now because people are doing what I'm making a case against today, saying that, if you're teaching, you better be able to do this. If you're not comfortable out here, and I think you can hear my tone of my voice, like I'm not hopped up on anxiety. I'm not hopped up on fear. Like I'm literally telling you what you should focus on and how the market should behave and deliver and the things to focus on and how it should start the runs, where it should reach to, all those types of things. Because it's stuff I do every single day. And some of you, because you're really, really weak, you're weak-minded, weak-hearted, you want me to trade in front of you. And that's the only thing of any benefit is because you want to be able to copy me. And it's not a cop-out for you to say, oh, that's your excuse. No, you want to do something where you're mimicking me, and you think that is you learning how to do it. The only thing that does is if I did that for 1 week, it would create such a level of codependence in everyone that was watching it. They would never feel comfortable doing it in their own development, in their own natural progression going through the content. Any adversity after that would be enough for them to say, fuck it, I can't do it. And then you'd hate me because I wouldn't be doing live streams. When I'm promoting you as the driver, I'm just teaching you how to drive, how to navigate. And you're going to find the quickest route to where you deem success. But you got to give yourself the permission to go at the pace that you will discover is perfect for you. You don't have to rush through these lectures. Nobody says you have to be on the same lecture that we're doing right now. If you're panicked that you're rushing through them just to stay up to date, you're wasting so much opportunity to do it correctly. You have the benefit of watching it as if it were live. That's why I'm using the 1 minute chart. You have every advantage of being here live and have no dependency on you being here live. The same measure of experience is the same measure of experience if anybody's watching it live. It's live streamed. There's tens of thousands of people watching them. There's so many other witnesses to watch when it's occurring that, yeah, this really did happen. It really was explained beforehand. It's the repeating logic that he keeps talking about, and it's repetitious. And you may think and say to yourself, he keeps repeating himself. That's good. Repetition is the hallmark of recognition. It has to be How many times did you work out in the gym and curl the bicep? Oh, fuck this. I've already done it 10 times. I'm not going to do 4 more sets of this shit. I've already done this. You got to go through it because it's ingrained. It's in your subconscious. You don't want to be thinking about reaching for information while you're watching price. It needs to be automatic, just like that. Like when I took that trade yesterday. Automatic. I was like, oh, fuck this. I ain't worried about making the box look pretty. I know what I got to do. I got to enter an order right now because if I don't do it, it may take off and run without me. That's because I've done this for 30 years. I have done this over and over and over again. And I also know what it's like to get that, oh, it's going to do, and then sit on it and wait too long, and then it runs away. So I know what I'm supposed to do. I got to react. I got to say, okay, I'm looking for this, but now it's done this. So if I want to take a trade, it's in the PD array I would be using right now. So I got to do it on a stop. I can't use a limit order because I'm already in the middle of a very small little range. So how am I going to be able to finesse a limit order? I might as well just do a market order. But I don't want that. I want to be able to buy as it's leaving the lower half of that inversion fair value gap. And that's why I elected to use a buy on the stop, because we're learning how the entries form, the patterns, and how you enter your limit order for the fair value gaps, Caleb. That's what we're introducing here. Next week, we're going to talk about things that are going to be problematic for the trade being effective. So it might look like it's in the marketplace. It may be a viable trade, but when do you stand down and say, I'm not taking that one. I'll just paper trade it or tape read it. Very, very important information next week. And I guarantee you the viewership is going to be the least. It's going to be the lowest. And it's going to be the same people that don't watch that on those lectures next week. They're the same people that will be either in anonymity or openly on the internet saying this stuff doesn't work, because they don't want to learn how to make sure that they're trading the environments that have the highest probability. They're lessons that I had never intended to ever teach. And because my son's making an effort to do this, I want him to have all the advantages of knowing when and when not to. It doesn't mean it's going to be easy, but these are the things that I do that helps me focus on the best. Think about it. Wouldn't you want that information? Wouldn't you want to know what are the things that's going to be in my way that I'm going to fall a victim to? And how do I cope with that? How do I navigate that? Because these are all things that I fell victim to and blew an account with. Every single lecture I go to give next week, if I didn't learn those lessons, I never would be able to do what you see me do. I can see it before it happens. I can outline it. And as long as you can see it and outline it, all you need to know is where you're going to get in at. And that's easy. That's the easy part. The hard part is knowing where it's going to go, when it's going to start going there, and what's the reasonable measure of retracement, if at all. If you could know those answers, entries are the easiest thing. But you're sweating it. I need to know how to get in. No, you don't. You need to know how to behave and how to manage yourself and your emotions and keep your psychology in a state of mind where you're not hopped up on goofballs and you're losing the plot because you're making money, or be fearful of any little tiny little retracement thinking it's going to completely come back and knock you out. That's a very hard stage in trading. Like you have to tackle that stuff early on, Caleb. Because if you don't, all the things that you do to try to prevent it makes it materialize sooner and more frequently. Trying to avoid a losing trade only ensures that you're going to take a losing trade sooner and more frequently, because you're going to wait too long to engage. You're not going to take it when it seems so overwhelmingly obvious, but it's going to be scary. The right trades are always going to be the ones that you feel, I don't know, it's too good to be true. Let me wait. And then it starts running off, and you chase it, and you regret that you didn't get a good position. And you worry about not getting in that good position when you felt it first to get in, and you're not monitoring the trade. You're not watching the behaviors and signatures that price is still telling you it's still moving in your favor. And then because it starts spooling and you've been spending so much time worrying about that you didn't do it right and enter when you should have, and you chased it, and yeah, you're in profit right now, but now you're making profit. You're changing your mindset from beating yourself up about chasing price and not taking the entry mechanism that you look for, fair value gap, an order block, whatever. And you switch over very abruptly to how much money you're making. And you don't even refer back to why you took the trade. And now you're worried about, should I get out? Should I get out? If I hold on to it and it turns around, so are you doing the right thing? No. And that's all the things that would pop up if I was out here doing entries every single day, every single live stream. I'm not making excuses for not taking trades. I'm going to be trading in front of you. But I'm trying to explain to the people that think they're going to try to use reverse psychology on me. I already know it's going to be detrimental to you if I do it. That's exactly what's going to happen. Because you're going to tap into 30 years of experience. Even if you copied me, you're not going to get the same result. Because as soon as you see any profit, you're going to be scared that I'm going to be wrong in front of the world. Or the market maker's going to run on a stop. Oh, shit. Calm down before I get all turned into 2 more hours. Let's just say this. We've had fun today. Okay. I've talked a lot. I've taught a lot. I've proved a lot. I've challenged you. And I asked you, do you believe there's an algorithm that controls price? Or do you believe that buying and selling pressure causes the fluctuations to stop dead in its fucking tracks right here? Dead in its fucking tracks. The randomness of buying and selling pressure. The randomness of all of these trading disciplines. Elliott wave. Supply and demand. Wyckoff. Point and figure. Andrews pitchforks and Andrews median lines. Harmonic patterns. Ratio trades. Animal patterns. Butterflies, bats, shark back patterns. How on earth, with all of that Mickey Mouse level bullshit, all those different disciplines of trading and what makes the trade go up and down for you as a trader, how on earth it takes more faith to believe in all of that shit giving the results of where price stops and turns on a dime, that all of those disciplines and all of the randomness, and think about the random ebb and flow of how it feels when you're watching a live stream. I might say something that makes a really profound impact on your understanding, and then I go off on a tangent and I start ranting about something and you're like, fuck, would you get back on topic, ICT? I'm on topic, my topic. But then you get offended by something I said. And then I may give you some more information, okay? And then they're like, wow, yeah, I'm glad I stayed. I almost turned off the fucking live stream, but now I'm glad I stayed for that. That just made a whole lot of sense. I'm glad that. So what are you doing? You're having a random fluctuation of where you feel good. Then you want to turn the stream off. Then you're wishing you would have turned it off, but you stayed. And then now you're thinking, oh, I'm glad. So that random up and down, that's exactly what's going on with every trader when they're watching price action. Sometimes they're going to follow their model. Sometimes they're not. Sometimes they're going to demand that trade setup, gives them a little bit more confirmation, and then they'll enter. That's not them trading with that logic. They're randomly reacting to price. And if you make any argument against that, you're full of fucking grade A bullshit, because the human mind isn't going to be able to stick to the rules all the time. This is my shit, and I still try to finesse it. I ain't going to hide that. I still try to finesse it. I always try to outperform my stuff. I always try to predict them before they form, because I want to try to be in there at a stellar level. I want to get in prices that are so fucking mind-boggling. Like, what the fuck? How did you do that? That's what I'm addicted to. I'm addicted to that moment of astonishment. As a magician, that was what I fell in love with when I first started doing magic tricks as a young man. I loved it when people's face would go, what? That reality of that blur between, did I just see what I just thought I saw? That is why I studied magic, card tricks, and sleight of hand, all that kind of stuff. And in trading, I wanted to be the fucking best. I didn't want anybody to say, yeah, you trade like, no. People say, wow, you're good. You resemble what ICT does in his trade. I can tell you're one of his students. But they never say ICT trades like. It is just I trade like me. And that was a goal for me. But if you're looking at these turns in price like this, and you're saying that the buying and selling pressure of everybody that's going to be trading at that given minute, they all somehow fucking came to some conclusion that the amount of buying and selling has to exhaust itself right at that level. It's the upper quadrant of our daily volume imbalance. After fulfilling a rebalance to the high of this fair value gap, which is a SIBI. Really? And it just happens to do the same shit here and here. And it just so happens to stop right here on this old new day opening gap high. And it just so happens to trade down to the consequent encroachment of that over here. You're telling me you're gonna stand in a court and tell me what evidence do you have? What evidence do you bring that says with unequivocal, it's without question, the effects of buying and selling, random buying and selling pressure with multiple mediums of why they're getting into a trade? You would fucking fail miserably doing that. But I can stand out here in front of you, in front of a court, any court, and call this shit just like it is here. And what do you think any fucking jury would say? Wow, that's some real precision shit going on right there. Yep, sure is. It's coded that way. It's absolutely coded that way. But see, what happens is when people that don't know how to trade, Caleb, what I'm protecting you from, you're going to have trolls because you're my son. But you are going to have a lifestyle that they're never going to have. And you're going to have it by your own hands. And you're going to earn it. And nobody's ever going to be able to say anything to you and have it stick because you're earning it. I didn't give it to you. You're earning it. And I'm already proud that you're making this effort again. But when people try to talk shit to other people, especially in our camp here, they don't like the fact that we're overconfident. They don't like the fact that we will stand up real quick and say they're full of shit and their stuff isn't really what makes the market go around. And we can come out here and do things like this. And they're live streaming and they're saying there's no way that the ES is going to go above the high because there's correlation. These markets are correlated. That's the reason why it's going to go up there. So right there, you've proven. Say to me that you don't know how market correlation has impact on price by saying anything but that. Well, that's what he's done. Live streamer says, no, there's no way ES is going to take the high out. And I'm buying it. And it blows the lid off. Rallies straight on up. Now, I could have went on that live stream and shit on him in his chat after he made a video about me. But me and my private students, I had a little ribbing with them. It was just them knowing that I took a trade and faded them. But I do that with everybody. And it's fun. I don't mean-spirited. It's just to reinforce it to my students who've already been convinced that there is an algorithm. Nobody's going to convince them otherwise. But it's fun when you see other people out there that are just communicating that they have no real understanding and they're floundering. They're floundering and they're saying whatever makes them feel fucking good. And it makes a perfect allowance for their inability to be able to call price before it happens. The inability to know that they're going to have a winning setup tomorrow or next Monday. I know I'm going to have a winning setup between 2 o'clock and 2:30 p.m. on Tuesday, on Thursday, every fucking day. I know my trade's going to be there. I know it's going to be there. Can you say that with your fucking harmonic horse shit? Can you do that with your ratio patterns? Fuck no, you can't. You have to wait for your indicators to paint this bullshit on your chart. I already know. I already know when the market is going to move. I already know that. Every fucking day, I know when it's going to move. I have to be present when it's doing it. The risk has to be appropriate for me to enter the trade. The structure's got to imply that this is clearly where they're going to draw to because the market's already displaced, caused the smoothness to go away on one side, and now they're going to reach for the opposing liquidity, where it's already proven itself too smooth. Relative equal high, relative equal low. That's not complicated, folks. It's not complicated. So when you hear people talk about what we do here, it's entertaining. It's sad because they're selling themselves short. Instead of saying, there's nonsense, there's no algorithm that controls price. Like I said, the invitation's open. You're welcome to bring whatever Mickey Mouse horse shit, okay, and call the market live. And I'll be out here doing what I'm doing. And I promise you, you will never be in the same neighborhood. We're just easing into this. I haven't even pulled back the veil yet. Like, wait till you fucking see. Wait till you fucking see what I'm going to be doing. You have no idea. You have no idea. Jaws are going to be fucking breaking. Okay, I'm telling you, literally, you have no idea what you're about to see. And if you've been impressed with this and fascinated with the intricate details about how it's behaving like this is nothing. This is nothing. But you'll see. All right. Long goodbyes and all. That's how it is. I'm going to talk to you tomorrow, Lord willing. We'll start around 9 o'clock if I can get everything set up and the stream works with me. OBS has been fickle with me, trying to get it to find my charts when I'm trying to set it up. But I'll talk to you tomorrow, Lord willing. Until then, be safe.